Have not gone through this. The Good Morning Vietnam part was painful. This is Barry Levinson.
That's how it started.
Yeah, this is Barry Levinson, who made that movie for Robin Williams. And Levinson, who wrote for Carol Burnett, among other things, and did a whole bunch of very highly regarded movies, captured the 60s. And part of that was the profound tension in the movie of a war. And I was sort of shocked to see the president in Hanoi
making jokes about it?
Making a joke or just stumbling over it. I thought, maybe I'm a little too close to it, but,
No, it was odd. It was odd, Tom.
Yeah.
I think for most people they agreed it was an odd moment over the weekend, Sunday morning. In the evening, of course, in Vietnam.
Yeah, I mean, there's no question about it. And there we are with the president on his way home, I believe, through Alaska, and will arrive here at some point here on September 11th. Joining us right now is Tina Fordham for a brief, geopolitical strategist, Fordham Global Foresight. Tina, we could do a 3-hour conversation with you right now. The world is so topsy-turvy, it is of shock. Are we at a point of instability, or can diplomacy and dialogue lead us to a stable outcome?
Thanks, Tom. Well, it might surprise you to hear me say it, but I actually think that the G20 meeting, for all of its kind of interesting quirks and shifts, highlights how in a topsy-turvy world, most leaders, with the notable exception of Chinese President Xi, who declined to attend, need these gatherings, and they are important. On the one hand, they're an opportunity for what I'm calling geopolitical hedging, a chance to, kind of opportunistically take sides or take part in certain aspects of agreements, like the India-Middle East transport corridor, very interesting development, and extending a seat to the African Union, which was a big India initiative. So, we used to not look at these kinds of international talking shop type of gatherings at all for their impact on global markets. And now they're a little bit of a crystal ball, I think, or maybe something more substantive.
I look, Tina, at the more substantive and where we are right now. What should be the approach of America with 1, 2, 3, 4, 5 balls in the air? How do we prosecute a foreign policy, particularly with China?
Well, there's the old saying about, watching your enemy and waiting till he makes a mistake. Now, China and the United States are not enemies. We used to be frenemies, and now we're something in between. But I do believe that President Xi's kind of snub to India, as it really seems, in not attending the G20 was a strategic own goal for China, coinciding, as it happens, and I was in Asia last week talking to investors in Hong Kong, with this flurry of sort of peak China stories and a real decline in investor sentiment around China. Now, the markets always run faster than global policy, and I think the non-appearance at the G20 by President Xi is a perfect illustration of that. He really should have been there, kind of bolstering China's commitment to international negotiations.
Well, in his absence, President Biden said that the China economic crisis, and that was the word that he used, made an invasion of Taiwan less likely. Do you think that that was helpful, that that was something in the playbook of his strategists, or whether that was something more off the cuff?
Well, I think without seeing into the president's mind and knowing something about his form, Biden tends to call it as he sees it. And so if that's off the cuff, then, that is how he sees it. China economic crisis, peak China, as we more likely to hear in investor parlance. Part of that sentiment, though, right? And Biden is taking a pretty conventional wisdom view, I think, in saying if they're having economic difficulties with Country Garden and with the property bubble and other considerations, the kind of failure to launch of the post-COVID boom that was expected, they're less likely to invade. Actually, history, tells us that sometimes a decline can lead to more willingness for opportunism abroad. I think we should take Biden's comments like this, though, with a grain of salt, to be honest. I mean, more important in terms of U.S. signaling are visits from people like Gina Raimondo and Janet Yellen.
Yeah, there was also the other side of this where China was protesting the U.S. hosting the 2026 G20. What did you make of all of the meetings, the focus on Vietnam, the focus on India? How much of that is geared toward, yes, trying to shore up allies, but also trying to shore up new manufacturing sites in a material way?
That's exactly what it was about. And in this sense, the U.S. is pushing on an open door in terms of the regional appetite in Asia for stronger partnerships, bearing in mind that President Trump withdrew the U.S. from the Trans-Pacific Partnership Agreement. You could interpret these kinds of deals and the elevation of Vietnam to a stronger status as a trading partner as, kind of making up for that. So, public opinion data has always made very clear that China's neighbors fear both China and Japan. Now they fear China a bit more. And so the U.S. is in a strong position to develop these kinds of relationships. And India, I think, gets a lot of points for the way it handled the summit. And things like the communique, which analysts were concerned, or the journalists highlighted, would there be a communique? That was all about making sure that President Modi of India, Prime Minister Modi rather, didn't end up being the first leader of a G20 summit who didn't, end up producing a communique. So very interesting signaling going on as we rebalance the global system.
Tina, the president will go to Alaska today. He will not be here in New York City. He won't be in Virginia. He won't be at the events in Pennsylvania to mark the 22nd anniversary of the attacks on 9/11. Tina, I wonder what your thoughts are on the appropriate way for a president to mark an event like this one.
I think it won't be lost on people. And, like a lot of you in the audience and in the studio, I was in New York on 9/11. It's a solemn and a somber occasion, a milestone in American history that really did change the course of U.S. policy in a number of ways. Frankly, it's surprising, I think, that the president isn't there. Maybe it reflects a desire to move on, but, you guys will. What do you think? I think it's a little too early to move on.
Tina Fordham, thank you for those comments. Tina Fordham today on this September 11th. John, do the math, 22 years. And I believe the two events of my life where time stood still was the assassination of President Kennedy and 9/11. 1941 plus 22 gets you to 1963. And I dovetail that from Pearl Harbor to JFK, and now we're 22 years on from 2001. And Tina, I thought, was really elegant.
I wonder how you think about that then, Tom. How to transition to marking this occasion in a different way, the absence of the president on a day like today from the traditional places, locations we'd expect him to be.
There's some nice notes out this morning on this, and this is not the first time a president has not attended one of the three sites in Pennsylvania, here in Manhattan, or at the Pentagon. Dr. Biden will be at the Pentagon today, I believe. But it's not the first time. There's been time where presidents were on the lawn. There was some other events as well. I believe Bush and Obama I would put there, but nevertheless, he's on a business trip, and he's on the way back, and he will meet with 1,000 first responders at Elmendorf in Anchorage, Alaska.
There will be a series of moments of silence through this morning. We will take all of them right here at Bloomberg on TV and radio on the 26th anniversary of the September 11 attacks.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think of myself as a realist, trying to see the world as it really is and not the way I'd like it to be. And sometimes I succeed and sometimes I fail in that.
what do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. JetBlue has traveled a long way from its startup days, but CFO Ursula Hurley says growth won't change the airline's quirky attitude.
At the end of the day, we view ourselves as a disruptor and a maverick in the aviation industry, and I'm really excited to play a meaningful role in that growth journey.
Watch Chief Future Officer, Wednesday on Bloomberg.
We think there's more downside risk here as we go through the next few months.
When the yields move, they're going to move down and a lot.
The question is not whether things are declining, it's whether they're declining fast enough.
I think positioning has really changed, and you've seen that inflection in sentiment in the options market.
The bottom line is the Fed wants to slow things down. Don't fight the Fed.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market on the S&P 500 nicely positive here by 0.4% following a week of losses and pushing ahead to retail sales on Thursday, CPI on Wednesday, and the main event, Tom, going into the Federal Reserve a week away.
I take your point. I think this has not been said enough. There's a Fed meeting after the ECB meeting. It maybe has a little bit of import. Nothing's going to happen at it. It's a dead meeting.
It's a forecast as well.
It's a live meeting. But, I take your point. You got to get to the Fed meeting. There's some data in front of it as well. But are all eyes on November? I think so. I think we've just leapt forward to a November analysis.
The hawks on the committee aren't screaming hike in September. If you listen to the economists on Wall Street, those that think we get another hike, I'm thinking Andrew Hollenhorst to Citi, perhaps Mike Gapen at Bank of America, thinking that risk still exists. They're looking to November, Tom, not September. The Fed wants to be patient now, wait to see if there is further evidence of a re-acceleration of this economy, which leads to an acceleration again in inflation. At the same time, they've got subtle signs that we're seeing a labour market slow down. There's so many contradictions at the moment, Tom. Way more contradictions in the data now than there were 12 months ago, where it was just clean. Bright green light, hike.
Well,
things are a little bit different 12 months later, that's for sure.
Talks about the last mile. He talks about, we're going to go to the last mile. We've been talking about this for 2 years, that you're going to go from Stanley Fischer's ultra accommodative, super accommodative, through neutral, some form of restrictive. Dominic Constant has used the phrase super restrictive, and now we got to go the last mile. And there's like 3 narratives, 4. 5 narratives?
It's the toughest mile. Sarah House of Wells Fargo came on the show months and months ago and talked about how hard that last mile would be. Torsten Slok of Apollo over the weekend put out a great deck, loads of charts, showed delinquencies climbing, bank lending, I'm sure he did, you just didn't read it, bank lending down. And Lisa, if you just let that continue, this economy will slow down. That's the view of some people on the committee.
There is conflicting data, and you mentioned that. And I was speaking to one economist who said when you get conflicting data, this is actually typical of turning points. And when there is an economic shift, often things get messy. So what do? You wait and you average. The data still matters. It's not wrong. It's not that suddenly there's sort of this inaccuracy. It's just that it's not going to reflect things in a smooth line. So it makes sense for them to wait. The question is, where are the balance of risks for them? And that we just don't understand.
Well, we know how they've shifted, that's for sure. The balance of risks have shifted in a massive way. 12 months ago, the biggest risk for them was doing too little versus doing too much. And now, Tom, if you ask them that question, I'm not sure what the answer is anymore. Clearly, it's far more balanced now than it was back then.
And he's central banker to the world, and this is the world is, you know, to have the former Italian prime minister on this morning was a great honor. Mr. Gentiloni, he didn't mince any words. I mean, it is a slowdown in Europe. He wouldn't go very staggy to your brutal and rude question.
Can I just say that you've nailed it, though? Never mind my rude question. Yeah. I think you've been on top of this, Tom, for the best part of 12 months. Is Europe just returning to what basically it was plagued with for much of the last decade, which is just low trend growth?
Well, it goes back to the
not get
60s
away from
and
it?
70s. The German economists who came up with the phrase Eurosclerosis. And, you know, I think on this August day where Mark Gurman's going to launch Apple products, basically monetary theory, there's directly linked to the fact that Europe's dictating what cord Tim Cook can use to plug in to the new iPhone. I mean, that's part of it. Regulation. Eurosclerosis is more about regulation in a business environment within Europe. Maybe it's there, maybe it's not.
This is what Europe's wanted for ages, Tom. They want to set the rules. They want to make the rules. Everyone else is looking to build a business.
Yeah,
they want to make the rules.
It's the American divide, the transatlantic divide.
And that's the bureaucracy of the European Commission. Let's turn to the equity market. S&P 500 futures here up by 0.4%. Elevated yields higher as well, TK, by 3 basis points, 429.20. Tons to talk about in foreign exchange.
In foreign exchange, it's there. Also, the 10-year real yield published moments ago on the Bloomberg terminal, 1.95, migrates up 2-3 basis points. Back towards a 2 level, and it's that vacillation you do see in foreign exchange. Yen stronger. We covered that in the last hour.
Lisa, dollar yen 146.87.
Big question here about what's going to happen with the Bank of Japan. Ahead of that, we've been talking about the big week ahead, and you mentioned the Apple launch of the iPhone 15, which does come tomorrow. Very curious to see how much this offsets some of the negativity that we've heard recently, in particular having to do around with China and growth there, whether they can offset that with wanderlust. We will discuss. Tom will not watch. Wednesday, U.S. CPI coming out. People will not be talking about the headline figure, which is going to be buoyed by the oil and gas prices. But the core CPI, when you strip out energy, you strip out food, what do you get in terms of how quickly it's disinflating?
Lisa, killer chart. For those of you on radio, it shows the quiescence there pre-pandemic, and then boom, up we go. What are we back, Lisa, about a third?
Yeah, well, we're back about a third. But as you were talking about, it's the last mile. And we're talking about some other components that are turning around, like housing and some of these other areas. Healthcare costs very much factoring into PPI coming out on Thursday, and retail sales we also get on Thursday. Some people expecting consumers to actually stop spending because maybe the savings is actually starting to run out. I'm sure we'll hear all about that. The ECB meeting, though, very much in the forefront of everybody's minds, just given the dilemma that was really laid out by the European Commission today. And John, I think that what we're seeing right now is an increasing ability to pause and an increasing ability to say we can have patience and take a look at the data, and we're not going to hurt things and encourage inflation further. How that's different with Christine Lagarde and Jerome Powell, it's a different kind of conversation. It's a little less comfortable for Christine Lagarde.
Much, much less comfortable for President Lagarde for the ECB this Thursday. Joining us around the table, Christina Hooper, Chief Global Market Strategist at Invesco. Christina, good morning to you.
Good morning.
We also need to talk about union disputes, UAW, the Detroit Big Three. Can you tell me from your perspective, is that just a headline risk we're reading in the papers right now? Or is that a symptom of a broader, stronger, hot labor market in America that's going to lead to higher costs for some of these companies?
Well, I would argue that it's more likely the latter. And that's because we saw Walmart's announcement last week about lower wages for new employees. I think actually because the labor market has eased a bit, it's tight, but it's not as tight, that what we're seeing with the UAW is probably more of a rear view mirror issue than what we have ahead of us in terms of what I expect to be moderating wage growth.
You have a shingle from Cornell, which is, some would argue, the #1 labor economics program in the country. Good morning, everyone from Northwestern as well. This is not Walter Reuther's UAW, is it? Explain to us right now your view, Christine, with all your study at Cornell on the atomization of the American labor economy. Is it legit, or can there be a reunionization?
Well, there certainly can be areas, and we've seen moves in different industries towards more unionization. But the reality is that that is a function of the tightness of the labor market, and directionally, the labor market is getting less tight. And so I would anticipate we see less of this activity in the future. This was a very unique environment that we've lived in the last few years, and it really has opened the door to the potential for unionization. But I think going forward, it will be very specific industries where we see this happening.
Rear view mirror, to me that's fascinating, the idea that you're saying that this is not going to be what we're going to see going forward. And so from your vantage point, what does that mean in terms of the last mile of inflation that we were talking about, and how quickly, we can get back to the 2%, how much conviction you can have to go back into longer term bonds?
Well, the last mile is going to be hard, but I do believe that we are very much on that disinflationary trend. Not every data point is going to support that narrative, but that will be the case. And actually, I'll point to something that came out last week. The Chicago Fed economists put out a note utilizing their model. They anticipate we'll get close to the Fed's target by the middle of 2024 without a recession. Now, my opinion is it'll be a bumpy landing, but it won't be an actual recession.
So there are two schools of thought with this, and it's really highlighted by the Morgan Stanley view of things, and then the sort of Jim Bianco view of things, increasingly the JP Morgan view of things as they ratchet up some of their yield forecasts, that when we go back to something more normal, bonds will maybe have lower yields than they have now, but not significantly. Morgan Stanley is the lone bull, right? They're going out there. Matt Hornbach, who is a friend of the show, has said, no, he still has conviction. Buy now. This is the time to do it. Are you in agreement with that?
Well, I would argue it is so hard to market time, so that it makes sense to at least start to increase exposure now, even if one is not sure that we've actually hit the peak. I think this is a time to be starting to increase allocations.
The vector, we brought this up a couple times today. I'm not going to let it up. I think it's so important and timely to October 6th. And that is the vector of 3-month annualized non-farm payrolls. Wow, is that moving in a strident direction south? Can you frame a negative non-farm payroll statistic?
Well, I don't have a lot of negative things to say right now about the state of the labor market. What we have is labor force participation increasing.
Saw it, yes.
And we have wage growth moderating. That's what I need to see. Those are the two most important data points within the jobs report, in my opinion. Also, if we look at JOLTS and we see the number of job openings, they've gone down significantly, all pointing in the right direction to maybe not a soft landing, maybe a bumpy landing, but one in which we see a moderation in wage growth, one in which we see a moderation in inflation going forward.
Doug Cass writes in, raises an important question about the Detroit Three. Let me throw it at you, Christina, if I can. Deglobalization, doesn't it just give these workers in Detroit more power, more leverage over their employers?
Well, one could argue that deglobalization has an impact and serves to boost inflation in a variety of different ways, including potentially this way. But the counterbalance, of course, is technological innovation. So could we get to an environment in which we're a bit above the Fed's target in terms of inflation for the medium term? Yes, but I think the Fed's willing to tolerate that because we also saw inflation below target for some time.
Christina Hooper of Invesco. Heard that a few times, haven't we, Tom? A tolerance for a higher inflation story from the Federal Reserve. That was not the conversation in 2022. It was
Oh,
2% is 2, and now it sounds a little bit more like what the former Fed Vice Chair Rich Clarida discussed, which is 2 point something.
Christina's colleague, Christina Catmany, stopped me cold before Mike Bloomberg introduced John Williams and Mike McKee the other day in a brilliant conversation. She modeled out 4%. 4% is a new level.
If you're just tuning in, welcome to the program. Sorry, Tom, I thought you were done. Equity futures on the S&P, positive here by 0.4%. Neil Dutta of Renmac writes in, finds it curious.
Never writes to me.
The consensus appears to be talking about a US growth slowdown as a foregone conclusion, despite having been dead wrong about growth for the last 3 quarters.
The humility, and I think you heard that with Christina Hooper, the humility that's in order right now with the 14 narratives. I mean, how many porridges is Goldilocks testing right now? Not 3, like 6.
Not
8.
too hot, not too cold.
Yeah, I mean, this is it's a cliche. It's original territory. Can I tell you who the Detroit 3 are?
Go on.
They're not the auto companies. They're Gordie Howe, Al Kaline, and Bernie Sanders. Barry Sanders. Barry Sanders. That's the Detroit 3.
Okay.
Cass knows this.
All right.
Al Kaline chewed up Sandy Koufax.
We're talking about baseball.
Baseball. Al
So
Kaline.
Dodgers.
Right field.
Versus
I had his
Detroit.
glove. I actually had an Al Kaline glove. That's
Koufax was Dodgers, right?
very good.
Yeah.
Nailing that.
Okay, thank you.
Thank you.
Appreciate it. Keith Lerner of Truist Advisory Services is coming up at about 8 a.m., so about 45 minutes from now. We're going to be talking about a range of things, including the economic data this week, with CPI coming out in a couple of days' time, and it's on to retail sales on Thursday. Mentioned this a few times already this morning, but it's the quiet period for the Federal Reserve, so no Fed speak whatsoever going into that decision about a week from now, a week on Wednesday. Lisa, in the middle of all of that, big event this week, never mind UAW, we'll be focused on that later on. But the situation with Apple, after the week that they had last week, the pressure to get some traction with this iPhone 15.
Especially because people think it's actually going to change the needle, that actually John Farrow, who doesn't want to upgrade his phone, is going to actually want to upgrade his phone as a result of some of the changes. This is actually part of the discourse.
The fanboys wrote in over the weekend, very upset about the slowdown, conspiracy theories. Yes.
Oh.
Very upset about it. Very upset.
Do you have anything to say?
Not really.
Okay.
Futures positive. This is Bloomberg.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
I don't think it's going to cause China to invade Taiwan. As a matter of fact, the opposite, probably didn't have the same capacity that it had before. But as I said, we're not looking to hurt China. Sincerely. We're all better off if China does what?
The President of the United States speaking in Vietnam, addressing the tensions between China and Taiwan. Live from New York this morning. Good morning. Equities right now on the S&P 500 positive by 0.4%. A lift in the equity market. Yields drifting higher by 3 basis points. Your 10-year 429.60. In foreign exchange, Tom, the euro just a bit stronger here, 107.24. Positive on that currency pair by 0.2%.
It's going to be interesting to see. And John, today we have a president traveling back from the Pacific Rim at about 4 o'clock our time this afternoon, maybe nearer to 5. He will honor and remember September 11th in Alaska on his way home. But before that is a modest note, John, and this is going to be early this morning. This happened maybe an hour ago. The president visiting the John Sidney McCain III Memorial in Hanoi. And this, of course, is part of our youth and part of our childhood of these prisoners of war in Hanoi, which makes even odder the clumsiness that we saw yesterday.
What did you make of that news conference yesterday?
I got to be careful here. You know, I'm not like Anne-Marie Horton. I have the surveillance cork where Anne-Marie can go on about this with some authority. But I just think it's been a president who for months and months and months has been managed in his press conferences and his appearances, and he clearly showed up in Vietnam as anyone would, I would, tired from a strenuous G20 meeting.
Not controversial to point out how managed he was, because he talked about that himself in the news conference.
Yeah.
It's the way it was cut off, Tom. The way it was cut off was pretty strange. To cut into the President of the United States, it's something that we wouldn't even do as journalists. So to see his aide do that was kind of bizarre, mid-sentence towards the end there, to cut in and kill the mics.
On the other side of the world, in Hanoi, and the president again traveling to Alaska and then home, Anne-Marie Horton down with perspective, with balance of power, and this is something she and Joe Matthew look at 24/7. I'm just going to cut to the chase. How's the president doing?
Well, I think if you look at that press conference, there are concerns because he was rambling. And to John's point of being cut off, it almost felt like the Oscars. If you were watching at home, the White House feed, you actually heard music over the president. So that's usually the cue to stop talking, even though reporters were asking him questions and he wanted to answer. His press conferences are managed in the sense that you know if you're going to get a question, they choose 5 people, but no one's asking you to give your question up, what are you going to say? But of course they have a list of people they're going to give questions to because they want to make sure there's a variety of journalists in the room that have different perspectives. What was interesting about that press conference, though, was the rambling. Weren't really sure where the president was going in some of his answers. He brought up at one point a John Wayne film, and he wanted to get to a quote in the film. I have not seen it. Maybe you have, where he talked about
John memorized it. I mean,
a lying
dog-faced pony soldier.
Yes, and he was saying that there are many individuals in the world who are that way, lying dog-faced pony soldiers when it comes to global warming. And it was just confusing for people to follow.
Did you get anything of substance out of that news conference yesterday?
What I got out of that news conference was that he is at least sticking to the tone when it comes to China, which is that he wants what he wants it squared away. He wants China to follow the rules. He wants it to be an up-and-up relationship. They're not trying to contain China. He said we're not trying to decouple. They're de-risking. Or that was Kamala Harris who actually said that in an interview. But this is the point of the administration this week. A lot of questions about China, and he said, I'm not trying to contain them. They just need to follow international rules of the road.
The former VP, or rather the current VP, says she's ready to go. That's new, isn't it, over the last week, to actually say that on a record?
Yeah, she said this to Associated Press and also to Margaret Brennan, Face the Nation. She was at the ASEAN summit. She was asked, do you feel like you are prepared for the job? In the AP interview, she just said yes. And then the interviewer said, well, explain to me how you feel like you're prepared. And then she's caveated that with, there's really nothing at this moment to prepare for. Joe Biden's not going anywhere. But it did take some people by surprise, but how quickly she just said yes and stopped.
Well, at this point, though, the reason why people are grasping to that is because of the polls, is because of the concern about some of these rambles or some of these issues, not to mention what we're seeing on both sides of the aisle and other people who have been in service for a very long time and are being raised some questions about their health. At what point do you start to hear with your ear to the ground a sense of who could potentially run instead of President Biden if this starts to get enough critical mass?
Well, at the moment, the Democrats are all rallying behind Biden, even though behind closed doors or there's whispers, everyone is concerned about his age. This is an individual. He'll be 83 next November. There are concerns about his age. No one is doubting, though, that he is going to run at this moment. I mean, and you see the push from the campaign. They're releasing millions of dollars in advertisements about this president. If he was going to step aside and there would be potentially a new candidate, I think you have to look to the governors, the executives almost of these states. You have Gavin Newsom of California, which I know impressed a lot of people recently. He sat for a very long-range interview with Sean Hannity on Fox News and really seemed to control that narrative, came very well prepared, and he's doing a little bit of a national tour in that sense. Then there's someone like J.B. Pritzker, the governor of Illinois, who could write the checks. You know, he is the heir of the Hyatt. So these are kind of the individuals you'd be looking for. And then, of course, there is the vice president. But at this moment, it doesn't seem like there's a lot of rallying support within the Democratic Party for her to take over to be the standard bearer.
As he heads to Alaska, does President Biden leave a G20 emboldened or weakened, really, given that some of the focus is less around the substance and or some people would say the pomp of some of these events and more on some of these other issues like the speech?
Well, I think optics will be about the speech. Optics will also be about the communique. I mean, the communique regarding the war in Ukraine has really irked the Ukrainians this morning. They don't even mention Russia's invasion of Ukraine. They talk about making sure that there's no countries that are going after another country's territorial integrity. That is a big walk back from the communique we saw at the G20 in Bali. But what you'll hear from behind the scenes from U.S. officials that these are just words. What's actually happening is that China actually left a huge hole by not attending this G20. India was able to have a successful G20, and the United States and other countries were able to coalesce around the global south. India, South Africa, Brazil. They want to make sure these countries are on board.
I want to bring it back domestic. And I'm going to do this. And folks, I should point out that Michael Bloomberg, the principal of the shop and his TV and radio network as well, wrote an essay on immigration this weekend. 1976, Ford on a different topic to New York City. New York City dropped dead. There it was. I can remember it clear as a bell at the time. Where is the dynamic in your Washington about any of the given cities, including New York City, and the migrant crisis that we have? What is the administration going to do?
Well, what's fascinating about this is that what you see is a Democratic mayor, a Democratic governor come out and really put the feet to the fire of a Democratic administration for more help when it comes to the migrants in these cities. This is going to be a huge fight starting this week as we potentially have a government shutdown September 30th. What you see is the administration asking for more Ukraine aid. Speaker McCarthy is going to have a rough time getting that through on a continuing resolution to keep the government open. So potentially he wants to cipher that off and put that with more funding towards the border. But with that would also come controversial asylum provisions. So this is going to be a huge debate this week when it comes to federal funding on the border, but also potentially.
Do we have time for debate, or do we have time for?
You have.
I don't mean now. No, I don't mean us.
About 60 seconds if you want
to debate.
No, I don't
mean us. No, but John, just the whole debate here, like the urgency here. The leaves are changing. It's getting colder, and I wonder.
Are we talking about immigration in New York?
Migrants in New York or Chicago. The Guardian had a wonderful essay this weekend on Chicago, compare and contrast with New York. It's not just New York.
So first and foremost, we should all be deeply uncomfortable using people to make political points. But the point that Greg Abbott, the governor of Texas, has made, regardless, is an incredibly effective one. It is proven to a certain degree that this has always been a not-in-my-backyard phenomenon, which that New York has not had to experience in quite the same way. And now it does. Anne-Marie, they've got a different view on it.
They do. They're trying to set up places where they can put these individuals, and they're also don't have the infrastructure, the funding they feel need to adequately provide, because then it becomes a big humanitarian crisis.
MH, it's good to see you here in New York. Wonderful. More from Anne-Marie through the morning, right here in New York City. Equity futures on the S&P 500 just about positive by 0.4%. From New York, this is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Stocks near session highs in the equity market on the S&P 500. There is a lift here across the board on the S&P, on the Nasdaq as well. Equities on the S&P positive by 0.4%. On the Nasdaq 100 up by 0.6%. On the Russell, the small caps elevated by 0.56%, following a week of losses on the S&P 500 for the first full week of trading for September. In the bond market, 2-year, 10-year, 30-year. Your curve looks like this morning. A 2-year moving away from 5% at 498.84. A 10-year yield pushing higher by 3 basis points and getting closer to 430 at 429.40 on a 10-year. Yields higher by, let's call it 4 basis points on a 30-year to 437.82. Going into CPI on Wednesday and going into retail sales on Thursday. And to finish in foreign exchange, the euro just a bit stronger through the last couple of hours, positive by 0.2% against the dollar. Had a look at 106 last week, back to 107, 107.26. Our conversation with the commissioner on the economy, Paolo Gentiloni, about an hour ago, Tom, on the growth forecast, lack thereof, should we call it that? Cuts to growth forecast out of Europe earlier this morning.
We played this banner for radio. I'll explain this carefully. A lot of people in earnings and economics are going back to, okay, where were we in 2019? Which I think seems to be a valid idea. Top-line GDP, including inflation, the United States, John, from the end of 2019, up 24%, all that stimulus, life is great. In Europe, I was thunderstruck running a 2% rate, up 8% over the same period. That is the Euro-US difference.
And are we going back to all of that? Low trend growth in Europe, based on a forecast we've seen this morning. Throw in Germany too. This is something we didn't have time to talk about with the Commissioner, Tom. The fact we've had recession there, basically, stagnating growth, and we still have an inflation problem. And there are hopes here that if you get softer growth, inflation goes back to target. It's not the experience of Europe over the last year.
Are they having the 3-month annualized thing? Nick Timmerus in the Journal today, Mike McKee mentions that he's been doing it for 3 weeks, 4 weeks, hell on his Western tour. The basic idea is disinflation is in place in America. Can Lagarde say on, I believe it's Thursday, that disinflation is in place in Europe? I'm not so sure. When I look at Brent, $90.34.
Certainly not with the same confidence, that's for sure. Under surveillance this morning, the President of the United States, President Biden, confirming his meeting with China's Premier Li Jiang at the G20 summit over the weekend. This marks the highest level meeting between the US and China in 10 months. Also at the summit, leaders backing a new plan to link trade between Europe, the Middle East and India. Leaders also acknowledging the war in Ukraine, but failing to jointly condemn Russia's invasion of it. AMH talked about that, TK, a few minutes ago.
Yeah, well, I guess it's there. It was a G18. Some people were saying, and just, you know what? Part of diplomacy 101 is you got to show up. The president showed up. I mean, it's just that simple with a bunch of other people, given all the different challenges that are out there. I sort of think it was off our radar. Tina Fordham was saying it was a bigger deal maybe than I thought, but, you know, I could be wrong.
We won't be talking about it tomorrow. It's
I don't
basically
think so.
what you're saying. President Xi, of course, did not show up. SoftBank's ARM looking to raise the price range of its initial public offering, according to our reporting here at Bloomberg. ARM filing for its IPO at $47 to $51 per share, which would value the company at nearly $55 billion, below the 60 to 70 range saw earlier this year. There is another IPO in the mix for this week. Instacart, Lisa, setting its price range this morning at 26 to 28 per share and looking for a NASDAQ listing with the ticker CART.
Well, here's the issue. And it's sort of similar to ARM in the sense that the valuation that's being talked about out there is substantially lower than where it was valued just months ago. In the case of Instacart, though, it's a significant decline. It's being valued at about a quarter of what it was valued, $39 billion 2 years ago. So you take a look at this and you say, are these specific to the names, or is there something broader here about a revaluation of a lot of private companies that has yet to percolate into the system in terms of solidifying some of those losses and solidifying some of that new valuation?
Wegmans, Costco, Food Bazaar, Fairway, which is an iconic New York shop. Have any of you ever done Instacart?
Yes. It used to have to deal
Report?
with Whole Foods back in the day before Amazon bought it. So if you did your online shopping through Whole Foods, pre-Amazon acquisition, you did it through Instacart. Here in New York,
What'd you
anyway.
think? I mean,
It was fairly decent. It was the same as all the rest, Tom. They send out couriers, they go pick up the shopping, they deliver it.
Do you like
basically the model.
Do you like other people picking out your fruits and vegetables for you? I have a thing about that.
I'm on a warpath right now. with
Just fruits
Amazon
and
Whole
veg?
Foods.
Yeah.
Meat as well?
Yeah, well, meat is actually, to me, they can pick the meat better than the fruits and the vegetables. I always get, soggy.
They make bad choices.
Yeah, like it's not the same kinds of fruit choices and fruit knowledge that I would like deployed with my
should they be
Are
going?
you
Why are they going
paying
public?
for high-level fruit knowledge would be
Well, I
my
go
question.
personally for high-level fruit knowledge.
Can I ask a dumb question? Are they big enough to go public? I mean, why are they? I mean, they're going public so somebody can cash
Well,
out, right?
TK, precisely. For them, yeah. I was looking at the numbers and it looks like that.
And ARM, you're more knowledgeable in ARM than we are. It's a British thing, and SoftBank's coming in. Am I right that they're coming in with big companies helping out because they're sort of protecting each other
Essentially, I
strategically?
think ARM is super unique, Tom. We used to talk to ARM and leadership at ARM every quarter in London, going back 8, 9, 10 years ago. Tom, this company's been around for a long, long time. It was absorbed by SoftBank. They're spitting it back out and sending it public again. It's just not the same. I don't think you can compare that to, say, an Instacart or a startup that's been doing loads of private rounds and is going public. It's just not the same thing.
Yeah, okay. You got your 8,000 shares?
Yeah, I'm ready.
Okay.
Nicely allocated. Can't wait. Not at all.
This is...
Final story, Tom.
Yeah.
I want to finish on this one.
Yeah,
it's important.
Tough.
A tragedy strike in Morocco. After the deadliest earthquake the country has suffered in 6 decades, the race is on to find survivors with more than 2,000 people. TK, it's just dreadful. 2,000 people potentially believed to be dead. The 6.8 magnitude quake struck late Friday, devastating a region dotted by small towns and villages with homes made of mud brick. And Tom, I just don't see how the IMF gets together in a couple of months' time and heads over here.
Received an email this morning, this through Bloomberg Security, and it's under debate. I don't have anything to say about what the IMF would or should or can do, other than I know that Christina Georgieva and her team will be riveted to this as a humanitarian emergency.
Absolutely.
This is down the coast, away from Casablanca. This is not all the images we have of Morocco, which are mostly wrong. And this is agrarian, mountainous, cold at night, and very poor. This is 50, 60 miles southwest of Marrakesh.
And you'd have to imagine, Tom, that's where the IMF would like the focus to be, on the rebuilding, on the humanitarian effort, and not on the economic get-together and having a look at the rest of the world and throwing out some forecasts and all of that happy talk. Not the time or place.
I was immediately in contact with their people. They got back to me right away on the potential here, and it's, as you can well understand, under discussion of how they can assist with the World Bank, with the Red Cross. This ongoing tragedy. 2,000 to me seems like a low number.
That's the latest, Tom, this morning.
Right now, we will go to the markets here, and as John mentioned, we do it with a buoyant stock market. Futures up 20. Subhadra Rajappa joins us now, head of U.S. rate strategy at SocGen here on the 47 narratives that were out there. You had to pick a narrative this weekend to go with on Monday, Subhadra. Which is the SocGen narrative right now on what rates will do?
I think for the most part, it's going to be wait and see, at least for this week, ahead of FOMC next week. Broadly speaking, if you look at the price action that we've seen in the bond market, the front end seems to be very anchored to Fed expectations. The Fed's going to pause at the September meeting. Whether they hike again in November is yet to be seen. But the data that we get this week will kind of guide the dots for next week, as well as set the trend for what potentially the Fed could be doing in November and beyond. So in that sort of context, range bound markets for the next week or so, we did get a ton of corporate supply that's been pushing 10-year yields higher. We could probably see a little bit more of that momentum, but really you're going to need more data to direct the markets from here on.
What's your take, Subhadra, on the implication from the latest missive over in Japan about potentially ending yield curve control, as well as negative yielding policy sometime in the near future, and having a better sense of when that would be appropriate by the end of this year? Does that change your outlook for U.S. yields, given the incredible buyer base that we've seen coming from Japan?
Absolutely. I think that we've seen a pretty decent change in the trend and momentum in yields in August. Granted, it's a quiet month, but we had the Fitch downgrades. You had the change in the YCC policy. That's definitely putting some pressure on yields, not just in the U.S., but also globally. But we'll have to kind of see how things play out, because at the same time, while they're adjusting policy, you're also looking at a broader slowdown. Europe, you're starting to see a slowdown in growth there. In the fourth quarter of this year, we'll probably see that the U.S. economy will also start to come under pressure as the consumers start to pull back a little bit. We've seen a summer splurge. Consumers have been extraordinarily resilient. But with student loan moratoriums expiring, savings rates starting to decline, delinquency starting to go up, I think that you're going to see a lot more pressure on the consumer in the fourth quarter of this year. And that, again, is something that could probably keep a lid on the rise in yields in the U.S.
Does that give you more conviction to buy in the government bond space and less conviction to buy on the credit side of things that might be more affected by the weakness?
That seems to be where you would want to put your money in if you think that there's going to be a meaningful slowdown in growth in 2024. We've always had a recession in 2024. We're moving perhaps away from a recession in the early part to more the mid part of the year. But, if the recession is still very much in the cards, and if that were to play out, I think you should start seeing a moderation in yields, or the sell-off in yields we've seen at the back end.
Subhadra, I've got to buy a bullet piece on the curve. Which maturity, full faith and credit right now, is most attractive for price up, yield down?
The front end is definitely very attractive. The market, in my view, is fully priced in for high for longer from the Fed. So we're basically pricing for the Fed on hold until perhaps the second half of next year, and only modest cuts after that point on. So in this sort of context, it probably feels that the place you want to be is the very front end, because if the economy does start to slow down, the Fed starts to pivot towards easing or easier policy, then you're going to see the front end start to rally.
Hey, Subhadra, it's good to catch up and get the view from SocGen. Subhadra Japa there. On the bond market, the 2-year still very close to 5% at about 4.98. Your 10-year close to 4.30 at 4.29. Your 30-year very close to 4.40 at 4.38. Yields higher across the curve from the 10-year out, Tom. The longer end just a little bit higher, shifting higher by 4 basis points on a 30-year this morning.
Yeah, I would watch the 2s10, 70 basis points. It's going to be interesting if that narrows and comes in.
If you are just tuning in, welcome to the program. The S&P positive here by 0.4%. Up a little bit later, about an hour from now, Tom. Claudia Sahm, former Fed economist and founder of Sahm Consulting, is going to join us at 8:30 Eastern Time. 8:30 here in New York.
She looks like a genius back 8 months. Everybody quoting the Sahm rule and recessions state by state and all this. And basically her message was, would everyone calm down? Right now, I mean, she'll be wrong. Claudia will be wrong in 2025. We've got that on the calendar. But for right now, she's been, would everybody calm down is, on the edge of data.
Wanted to squeeze this story in, Tom. Apple this morning extending an agreement to get modem semiconductors from Qualcomm for 3 more years. TK, this is something I know you're focused on. Apple at the moment, of course, In focus for the iPhone 15, this is a story elsewhere. Qualcomm surging off the back of this news. Tom, we'll catch up with Mandeep Singh of Bloomberg Intelligence a little bit later in about 5 minutes' time.
We got to get the photo of me talking to Matt Miller on the sidewalk at the Apple store umpteen years ago. I think it was raining. I had an umbrella on. Apple was going to die. It was going to go out of business. It was over. It's done. Finished. I can't remember why. Doesn't matter.
They've done that enough times, right?
Yeah. And are we doing it again right now? I mean, the gloom, it was not China gloom, but it was gloomy this weekend.
The significance of this particular story is that there was discussion around Apple creating their own chips and what that would do to Qualcomm. And it seems like that chip isn't quite ready yet, giving Qualcomm something of a lifeline after not seeing the business really expand as much as people expected in China.
The stock taking that lifeline and running with it. Qualcomm up by 8.5% in early trading. Mandeep Singh of Bloomberg Intelligence on all of that news up next from New York. Good morning.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He caught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
We think there's more downside risk here as we go through the next few months. We're underweight technology as per your conversation for a number of reasons, not least because the US tech sector is trading above a 60% PE relative to global equities. The tables look stacked against global equities, US in particular, and tech at this point.
Jonathan Stubbs, equity strategist over at Berenberg. Two names to look at this morning, Apple, Qualcomm. This story just dropped moments ago. Apple extending an agreement to get modem semiconductors from Qualcomm for 3 more years. This from Qualcomm. The new pact will cover smartphone launches in 24, 25, and 26. There was the potential, Tom, that the iPhone coming out this week would be one of the last to rely on Qualcomm's modem chip. That stock is up in a pre-market by 8%. That's Qualcomm higher by 8%. Apple nudging a little bit higher after a tough week last week. Yeah. Going into that launch, Tom, for the iPhone
Tom
15.
Keane, modem technician. What do I know about
more than
modems?
Me? More than me.
All I know is the EU says you got to put a different code in to get to the modem, and I don't.
You're so much more up to speed than that. Give me a break.
I'm looking at the chips. I always go to the chips as well. Joining us right now, Mandeep Singh. We've got to go right to this. It's so important. Senior Apple analyst for Bloomberg Intelligence as well. And also surveillance tennis expert. Let's digress here. Rip up the script right now. I could hear people in buildings cheering. That was one hell of a final men's tournament, wasn't it?
It was, especially the second set was epic. I mean, you don't see those kind of rallies.
36 years old?
It felt like he was faltering at one point, and I've seen this a million times with Novak. It looks like he's lost his legs.
You think he's faking?
Second set looked like he was aging. I was ready to say Novak's got old, and then Novak got young again. Mandeep. That was kind of the way it went in the second set.
The fatigue, and the response.
Long, right?
And look, I mean, the guy is clearly, a lot will argue about it, but he's the GOAT when it comes to the slams, and probably no one can beat his record.
When he comes off the court, he doesn't go, "I'm going to Disneyland." He goes, "I'm going to Cupertino to buy whatever the new toy is." How is this week going to go for Apple? I mean, away from the modem news, do you got a thumb up on all this soiree for Mr. Cook and all?
I think with Apple, you have to think about the features they're going to introduce in the phone, and it's not a guarantee that we'll have a big upgrade cycle. That's why these events are so important, because time and again, we have seen the big upgrades come when they introduce new features, whether it's a camera or something else in the phone, and there has to be that element that's going to rush people to, upgrade their iPhones, and it's not a guarantee.
Well, this is a problem because they've been able to dress up poor unit growth with higher average selling prices. So if there isn't a big upgrade, where are they going to get the higher ASP from?
And that's never a good strategy to, extract more in terms of making people pay more because you reduce your install base. I mean, look, right now, Apple's install base isn't growing. Now, for them to take market share, they really need that new phone that everyone is excited about. And they are one company that hasn't talked about generative AI or large language models. You would argue a lot of the inferencing for those generative AI has to be done on Apple phones. They haven't even mentioned a word about large language models or generative AI on any of their calls.
So what's at stake in terms of the new creations in this new iPhone, right? What could they really move the needle with? Is it that much better of a camera? We've done that before. Is it just a faster kind of charging device? Okay. What could it be?
Well, so they have shown their Vision Pro demo, and clearly spatial computing is where the next leg of computing is going to grow. I mean, I'm not betting on metaverse, but clearly there's an argument to be made that similar to wearables, you could get a big pop in terms of, the Vision Pro devices and how it really expands the Apple ecosystem. In the end, it's about the Apple ecosystem and the vertical integration that they've been able to do over the last 2 decades.
So in other words, you're saying that instead of having a laptop or a basic computer, we're going to put on goggles and have our phones and be able to walk around and be in a computer.
You could argue that is the future, but that's not imminent. Like, it's not near term. It's all about what is it that they can do in terms of expanding the scope of your iPhone to really tailor it to the next leg of computing. And that's why I bring in the generative AI aspect, because Qualcomm has argued you are going to run your large language model on your phone. You're not going to do it on your cloud. That's what inferencing is all about. And Apple hasn't mentioned anything around it. So this event is quite important.
It's Mark Gurman's territory, but let's channel Mandeep Singh right now. Is there any discussion about what happens after Cook? Is there like a succession plan or an envelope in a desk, or like how long does he keep this going?
I mean, really, right now they're at a crossroads where supply chain diversification is paramount for investors. And until they fix this in terms of Apple actually diversifying their supply chains, Tim Cook is the guy to facilitate that.
Is this buzz about Huawei's new phone legit? Do you appreciate that buzz?
Well, I think it's very hard for Huawei to embed the latest leading node chip because, look, China government has thrown a lot of money in terms of building semiconductor manufacturing. But for them to get all the pieces right, chip, packaging, assembly, everything, it's very hard. And we know semiconductor manufacturing is very iterative. That's why TSMC is finding it hard to replicate their fab outside of Taiwan. So I have my doubts in terms of the phone being as good as an iPhone or...
Even if it's not as good, let's say it's 3 years back. Let's say it's like the iPhone 12, whatever. Are we missing the mood of the country shifting away from Apple? That's what I'm trying to identify. And if there is a mood shift, does it really matter whether it's the equivalent of the iPhone 12?
But why would consumers want a phone that's equivalent to iPhone 12? As a consumer, Chinese consumer, you want your hands on the latest gadget, and we know they're very savvy with all the app usage.
But if I wanted a better phone, wouldn't I just get a Samsung? There's a reason I buy this, and it's not just because it's a decent phone. The Samsung is arguably a better phone. It has a better camera, has done for ages, but I don't buy the Samsung. There's a reason I buy this beyond the technology that it has. I've had it for a long, long time. I'm a part of the ecosystem. It's really, really sticky. But also at the same time, there's some brand recognition associated with this, even here in the United States. And I'm wondering whether that's changed in China, whether that's really the brand you want to carry anymore.
I don't think so. I think you're going to see a rush to upgrade, especially from Chinese consumers, before there is an explicit ban, let's say. And in my opinion, everyone gravitates towards, the perceived attractiveness of Apple. And it's because of the ecosystem. It's a software. It's everything that's vertically integrated about an Apple ecosystem.
So how does the ambassador of Tim Cook address some of the concerns that have been expressed in share prices, if expressed by analysts at this launch, or even in the next couple of weeks, if he wants to maintain that kind of enthusiasm within China, while also maybe shifting and diversifying some of that risk?
Well, so they clearly have to work with the Chinese government. And so far, Apple has done a pretty good job. I mean, there is no other mega tech company that has 20% revenue exposure to the Chinese end market. And so to give Apple credit, they have been able to work through the issues. But clearly, I think from a China perspective, they want that local company, Huawei, to start making the phones. And that's why they're investing so much.
This is un-American. We got to change from Apple over to pumpkin. I mean, this isn't this. I saw this like 3-4 times this weekend. You know how we rush it? We get Christmas decorations out.
I know.
Like November 1. Meg Terrell over at CNN with the action photo out on Twitter. Thank you, Meg, their medical correspondent. Pumpkins now, it's 50 days to Halloween. John, you buy the orb right now. It's not going to make it, carved or uncarved.
It's an American illness, isn't it?
It's what?
Let's go.
Lisa, help me here. When should we be buying the pumpkin?
I'm all with you in terms of early decorations. Pumpkins are it's fall, and they grow in fall, so they are harvesting pumpkins. But I'll take your point.
So this is like a pre-Halloween purchase.
Yeah, it's sort of like celebrating fall, and I can get behind the idea of that because you can see the leaves starting to change when you go, outside of the city. So I'm just saying, I understand that.
I had 3 of them last year.
I do agree, though, that pulling out, the Easter Bunny after Christmas is sort of crazy.
Yeah. January 1.
Yeah, January 1, all of a sudden, those like marshmallow Easter bunnies.
It's like buying roses.
Really?
You want to do roses on Valentine's Day?
Yeah, you don't want to buy them near Valentine's Day. It's expensive.
No, you want to buy them the day after.
Day after.
They're on discount.
On sale. Mandeep, thank you. Mandeep Singh of Bloomberg Intelligence. It's a long story we don't have to go into.
We fortunately don't have to go into it.
Keith Lerner of Truist Advisory Services joining us in about 5 minutes' time. Really important week on several dimensions. We've got CPI and retail sales in America. The good news is the Fed isn't speaking, so that's data in the Fed taken care of. Tom, on the company side of things, we've got that debate between UAW, the Detroit Big Three, negotiations ongoing, and we've got the unveiling of the iPhone 15. So plenty going on this week, that's for sure.
There's a lot. It's hugely going on. I'm going to go ECB
as
the top item, but we bust Lisa's chops about it, but the bottom line is it's a toxic brew. I'm not kidding. I mean, there's like
what have I
a
been
lot of
pessimistic today?
But there's a lot of toxic brewedness out
Super toxic, yeah. Equity futures on the S&P just pulling back from session highs. We're positive here by 0.4%. Yields are pushing higher by, let's call it 3 basis points on a 10-year, 4.30. And in foreign exchange, the euro just a little bit stronger. The euro against the dollar, positive here by 0.2%, 107.19.
In the middle of a massive exhibition center located on the western suburbs of Shanghai, where the annual car show is taking place. This is the first exhibition after the end of the COVID lockdown. We can feel a lot of excitement on the ground. Electric vehicle is going to be the new theme of the industry. Most of the European companies and Japanese car makers who are considered latecomers to the China EV party are launching their EV products. They are making their foray, intensifying competition in the market. For example, Volkswagen yesterday debuting their ID.7, which is electric vehicle rivaling the likes of Model 3, which is one of the best-selling products in China. And Mercedes-Benz, they are announcing the launch of their new super luxury model of Maybach, which is going to be a fully fledged electric vehicle priced at $200,000 each. Domestic players are also trying to maintain their lead in the market. BYD, for instance, unveiled its first luxury model called Yang1 yesterday. It's priced at about 1 million yuan. At the same time, it's seeking to gain market share in the mass market as well. Needless to say, attracting all the car makers to the Chinese market is the rosy growth prospect. Demand is surging. By some estimates, EV sales in China are on track to exceed 8 million units this year from more than 5 million last year. The future of the car industry is EV, for sure, no question about it. This is Charlie Zhu, Bloomberg News, reporting from Shanghai Auto Show.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think of myself as a realist, trying to see the world as it really is and not the way I'd like it to be. And sometimes I succeed and sometimes I fail in that.
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We're in a brave new world, as we call it, and there's lots of sort of shifting sands.
I think that we're entering a very important period here where there's probably going to be a handoff from the focus on inflation onto the real economy data.
That bullish sentiment has really waned, and what that has done is it's really taken the tailwind out of the market.
We don't believe there's hikes next year. We believe there are hold next year.
The Fed, the ECB, they're stepping harder and harder on the brakes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Mr. Farrow really diving into the 9 o'clock hour, getting set up there as well. Futures up 17, Dow futures up 38. VIX is not giving me much information. It's just sort of, I'm going to call it, Lisa, almost positioning Monday here on September 11th, and we'll see the Vice President in Lower Manhattan here in the hour at a remembrance at 8:45 of Flight 11. But it's just sort of a like get ready for the week Monday is sort of my feeling on it.
Yeah, it feels like there's nothing going on. It sort of feels like a lack of conviction Monday where people are just kind of waiting and nobody really has a sense of where they want to go, but they kind of want to tweak things around the edges and wait and see. It feels like a tipping point kind of moment, but it's kind of, filled with ennui almost, this sense of we don't know even what we're waiting for.
I don't know what ennui means, but it sounds good. We'll go with it this morning. I'm going to go with the 10-year real yield, 1.96%, showing the conundrum out there. Be honest, I don't know what the real yield is in Europe, but it's going to be real for Christine Lagarde on Thursday.
Brutal assessment from the European Commission. They're trying to maybe spin it slightly different by saying that maybe this isn't really a stagflation type of profile going out. But how does she grapple with this? How does she support economic growth, which isn't their mandate, by the way, while also dealing with CPI that's north of 5% in the region?
Certainly back when CPI was back like that in the middle 60s, I think, even the early 1960s as well. And of course, what we hearken back to in the 1960s is there was a 3-year period where I survived on Hostess products, Twinkies. They had this pie thing. We lived for this stuff. For our international audience.
Okay, that's not food. I'm sorry.
We need to stop the show now. Is basically grape jelly and peanut butter combined with grape jelly buys
Okay.
Hostess Twinkies.
People are eating breakfast. That I'm just imagining right
We
now.
had
Hostess
Twinkies for breakfast.
Twinkies with peanut butter and jelly from Smucker's. So basically, if you're just joining the program, hold on a second. The actual news is Hostess Brands is going to be acquired by J.M. Smucker for $34.25 a share.
That's very good. You nailed that. I mean, Chart Banner, I sent an email to Chart Banner. I think it was Sunday. This was rumored over the weekend that this was going to be there. And I said, you got to be careful. You can't show the little pink snowballs. I hardly had those.
You hardly had those.
My sisters took the pink snowballs, but Twinkies were a food group.
Were they?
Oh,
did
yeah.
You, for a
3-year period.
And how did you emerge from that 3-year period?
I emerged from it healthy and, like every other kid trying to get to the next thing. I think I went from Twinkies to Genesee Cream Ale, but that's a different story.
Well, there is a bigger story here with respect to capital markets being open and some of these acquisitions. It's supposed to be acquisition M&A Monday, remember?
Scale.
And yes, so it's scale. There's a consolidation, but the fact that there's also the Instacart IPO that's also in there, especially after last week's issuance of corporate debt, the market is open. It might be slow, but capital markets are open, even at high yields, even at some of these concerns. Again, it doesn't feel like anything has broken from yields where they are, which raises this really deep question of why should they go down?
Peanut butter and grape jelly is bringing me an EBITDA margin at 21 cents on the dollar. We didn't mention this yet. We'll get to it quickly here before we get to Keith Lerner here with Truist Advisory. Lisa, we got to open up in Asia. We got to hire people in Asia. We're going to Asia, and then there's UBS off the Credit Suisse merger going, maybe not.
Yeah.
We got that earlier.
Well, and we've seen this from other big banks too on Wall Street, right? I believe that Morgan Stanley cut back some of their staff in China as well. How much is this just because are they really even going to be allowed to do business in the same kind of way in mainland China, certainly, and in Hong Kong? Does it have the same kind of international position given its interconnectedness with Beijing? I mean, it's sort of a question that you're not going to get an honest answer when you hear from any of the megaphones coming out of the big banks, just how sensitive it is.
9% profit decline there, but far more importantly, I'd link it into Goldman Sachs. It's the time of year. It's the time of year where people are right-sizing as well. On the data front, help me here, Lisa. Futures up 19, NASDAQ up 0.7% on the NASDAQ 100. I'm focused on yen, stronger, 146.64 off some Bank of Japan chat.
Yeah, speculation, not just speculation, UADA coming out and talking about by the end of this year having a sense of whether they can move away from negative rates. I'm also just generally looking at dollar strength across the board that has faded. And now we are solidly in dollar weakness with the euro even stronger versus the dollar, despite what we heard from the European Commission. The idea confirming recession, 0.4% contraction in Germany's GDP, leading to this really subpar growth perspective in that shared currency region.
Right now, we're going to go into a conversation. Gina Martin-Adams later in the hour to round it out with Claudia Sahm. Right now, Keith Lerner, Chief Market Strategist, Co-CIO at Truist Advisory Services. And the major charm here, folks, is he is truly legit on the technical aspects across equities, bonds, currencies, and commodities as a CMT. Keith, thank you so much for joining. What do the charts tell you? We've got like 8 narratives going on. It just seems a jumble. Is the technical structure of the markets plural? Is it a jumble?
Yeah, well, great to be with you and Lisa this morning, as always. I think jumble is a really good word, Tom. I mean, as we kind of talked before the break, as you look at the overall equity market, we think at this point it's not time to be on offense or defense, but be somewhat patient for a better opportunity to do so. If you look at the S&P itself, you're basically in a range, kind of digesting the big year-to-date gains, and you're in the middle of that range, 4,600 on the upside and about 4,330 on the downside. And there's not a lot of momentum. And I would say as we head into this kind of busy week, but also this month, there does seem to be a lack of upside catalyst as well. So again, we're just kind of, marking time right now.
Given the fact that it does feel like a muddle, that it doesn't really feel like there's anything screaming out, what does that mean? What do these types of muddles sort of serve in terms of turning points one way or another, both from a market perspective and economically?
Well, they can mean a lot or they can mean a little. Some things that we're looking for during this kind of churn, so to speak, is, what are credit spreads doing right now? They're relatively tight, so nothing sinister out of that. sector leadership is really mixed as well. So I don't know that it's a bad omen per se, but what you're waiting for is to see what is going to come out of this as leadership. I mean, the one, as you look back to the equity markets, you're starting to see energy, obviously the last month perk up. Technology, we know, the Apple launch this week has been more of a market performer as well. And then you're just seeing, you're seeing a little bit better activity out of some of the defenses, but not enough to say a trend change. So I just think it's not trying to say what the market's going to tell you. It's waiting for the market to basically speak up and see where that leadership's going to come from.
What's more important to you this week? We get a slew of economic data. We also hear from the ECB. Is that more important, or are the Apple's iPhone 15 and the potential for a UAW strike more significant for you?
Yeah, we have a lot to pick from this morning, don't we? I would say more on monetary policy. If I think about Apple, I mean, that stock's up 37%. Technology is up over 30% this year as well. So I don't know what big surprises we're going to get from there. I think the UAW will put some focus back on, inflation. But then again, we had Walmart last week, the biggest private employer in the world, saying things are softening on that side. So I really think it's about ECB policy, how that relates to Fed policy, and this U.S. dollar, which has had a lot of strength here recently.
Keith, I'm hearing a lot of macro analysis, macro this, macro that. Unfortunately, we'll do this with Claudia Sahm in a minute. Love her to death. Keith, how do you identify a second leg of a bull market?
Well, what you want to see is so we've had the big move up. We're still in an uptrend. We're consolidating these gains, not seeing a lot of distribution. What you want to see is urgency in buying out of this range, right? So you want to see the breadth of this market start to expand. You want to see the percent of stocks above the 50-day moving average get to 80%, 90%, just showing a real, demand coming in and urgency to buy stocks. And then you want the sector leadership to really start moving more cyclical and be more broad-based. That's what we'd be waiting for to get more bullish on the upside. Conversely, if you start seeing the defensives start to tick up and credit spreads start to widen, that would be a signal more negative at this point. But again, we're neutral, strongly neutral, Tom and Lisa, against stocks, bonds, and cash right now. And then, some people want you to always have a strong call, but today we're just giving us we're taking what the market's giving us, and we think that's the right place.
So what does strongly neutral mean? That's such a fantastic way to describe the sort of ambiguousness of this moment.
Well, as a strategist, everyone wants to say, hey, this is the time to buy or this is the time to sell. And sometimes when you say you're neutral, they think that you don't have an opinion. And we do have an opinion. We're strongly neutral, saying we should be more aligned with, where your long-term asset allocation, of course, stocks, bonds, and cash, sticking higher quality and not taking those big bets across asset classes. But I will say, where we've been taking bigger bets is we've been overweight the U.S. all year. We've been most negative on emerging markets. That spread is wide, and we're staying up in quality and in fixed income. And we don't think you're being compensated today for the risk that you're seeing in the high yield market or the investment grade market.
Keith, great brief. Thank you so much. Keith Lerner is with Truist this morning. The only thing I know, afterthought strongly neutral on our math teacher. That's where we are.
Evidently.
We're like 3 days into the torture. And I said, well, what do you think of Miss Wang? And she said, I'm strongly neutral.
I think that both of my children are strongly neutral on their scholarly experiences. I think that that's really fun to listen to, because he really raises good point, which is people think that means you don't have an opinion. But it does. It's just that, there's not a lot of conviction to push you one way or another.
Granted, we've had this titanic lift in rates, which is completely unusual, and it's wrapped around the pandemic and all that. But the heart of the matter is we really don't know how to act at these points, as El Arian brilliantly says this morning, the last mile. This is all new. We really don't know what to do we?
And this is the reason why the Fed and the ECB are waiting, right? I mean, it makes sense. But at that point, so if you're an investor trying to get ahead of things, do you just basically say, we can't? No, so then we're just going to be in the middle.
Lift to the market this morning on the Standard & Poor's 500 up 21 points, S&P up 0.5%.
It's a good point, though, in terms of when some of these higher rates, you talked about that surge in rates, when it's going to really become the norm where it percolates in so you don't have to say it's going to hit the market when it is hitting the market. And that's the reason why I think it's interesting that we're seeing the Instacart potential IPO as well as the Twinkies and the Hostess situation being acquired.
I mean, Smucker's been making money for years. I mean, they mint the money on it. Instacart, to me, I mean, I don't know anything about it. I'm not qualified to warble on it. But the answer is Instacart the kind of business that should be going public? I mean, are they like profit making, and are they going to become a Dow Jones Industrial member?
Well, I will say that they're being valued at about a quarter of what they were just a couple of years ago, which, again, is it because they have to kind of capitalize right now, cash out while they can for their owners, or is this that it's only going to get worse, or it's not going to necessarily be as high a valuation? Either way, people are throwing in the towel. They're raising money despite the higher yields and despite valuations that are subpar relative to recent history.
In this 8 o'clock hour in New York, it is September 11th. We welcome all of you around the world. We'll have remember it's at 8:46, and what I think is so important, Lisa, it is not Manhattan and the Pentagon and Shanksville, Pennsylvania, but it is also a president returning home. He will be in Anchorage, Alaska today.
Not in New York or near the Pentagon, which is the cause for some concern. On a bigger stance, though, it is amazing to think that it's been 22 years. And it is still catastrophic and very present in people's minds who were here during
It has been
this
sport.
event.
It is September 11th. Thank you for joining Bloomberg Surveillance.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. JetBlue has traveled a long way from its startup days, but CFO Ursula Hurley says growth won't change the airline's quirky attitude.
At the end of the day, we view ourselves as a disruptor and a maverick in the aviation industry, and I'm really excited to play a meaningful role in that growth journey.
Watch Chief Future Officer, Wednesday on Bloomberg.
I think that we're entering a very important period here where there's probably going to be a handoff from the focus on inflation onto the real economy data, and it's going to be a slow process. But I think that I'll repeat what I just said. Yields probably go sideways for now, but when they make the next big move, it's very unlikely to be up.
Stephen Major of HSBC, and that is what Bloomberg Surveillance is about. What a difference, I believe this was on Friday, between Major looking for lower rates at HSBC and Lisa Abramowitz, Mr. Davis, Earl Davis, at BMO Capital Markets, Bank of Montreal, just flat out going the other way, looking for longer.
The gap between the bulls and the bears is getting further and further apart. And I have to say, what happened overnight really confirms the uncertainty here. And I'm talking about the Bank of Japan in particular.
Yeah.
And the discussion of UEDA possibly knowing by the end of this year whether or not to end negative rates. That changed the scenario in markets. Is it going to have a lasting effect, and could it on the U.S. market for treasuries?
That's one of the uncertainties out there. And what I would say over the weekend, you just sort of look at the zeitgeist, your eyes are glazed over, and you're looking at the computer screen, and the answer is the set of uncertainties right now are just extraordinary. And it's led by China. I think China takes top billing, but all these different narratives that we have clearly indicate, how do we get to November? How do we get to January? Where are we the 4th of July of next year? I have no clue.
I keep going back to Diane Swank saying that she has the humility, and I do too, of saying, I don't fully understand all the different threads and how they're going to come together in terms of painting the new economic narrative.
Our thoughts to Diane Swank and all of the National Association for Business Economics, including our Michael McKee, that we're so close to what we saw 22 years ago on September 11th. Right now, we're going to dive into a conversation, and this is an informed discussion with a gentleman from Brown Brothers Harriman. Yes, currency is a litmus paper, but for Win Thin of Burma and for all of his work at Columbia, a good time to speak of the broader Pacific Rim. Win, my question for the day is simple. Are we going to see an export of disinflation out of a troubled China to Hanoi, to your Burma, and for that matter, across the Pacific to America?
I think that's the process that's in place. And to me, that's not a bad thing, right? We're central banks around the world, both developed and emerging, are fighting inflation. So, hey, a little bit of disinflation really isn't a bad thing. Now, the bad news is that disinflation is coming at a cost for China, right? We know that the economy is slowing much more than anticipated or desired. So it's a double-edged sword. But I think right now, with the market so focused on inflation, a little bit of disinflation is good news. But hey, we've got a long way to go before we can sound the all clear on inflation fight.
I've got to ask the question, Dr. Thin, that people want to know from you, which is, can yuan go round trip back to 2005, which is about an 8.20 level? Do we see an outright devaluation as a solution for a troubled Beijing?
Well, I think they've been trying to resist that. If you look at the fixings and some of the sort of measures at the margin, they've been trying to prop up the yuan. They don't want it to fall out of bed. At the same time, I don't think they can really do much against it. And we go back to sort of monetary policy divergences. As long as the People's Bank of China is in easing mode and the Fed is in tightening mode, there's really, to me, only one direction for dollar yuan, and that's higher. Again, they'll try and control it. I think the devaluation would be very, very dangerous because, it would be bad for instance, Chinese corporates. They have a lot of dollar-denominated debt, and all of a sudden that debt becomes much more expensive to service. So for now, I think they hold off on the devaluation, but they lean against the depreciation. But again, it's not much they can do. It's like trying to fight the tide.
When we take a look at all of the stories that are kind of percolating, we were talking about the different narratives that are coming out of the woodwork and creating this confusing brew, I would say, more than a toxic brew necessarily. The one that stands out most to me is the Bank of Japan. And yesterday, what we heard from the Bank of Japan Governor Ueda was that if the Bank of Japan becomes confident that prices and wages will keep going up substantially, it will end its negative interest rate as among the options available, and that they will know this by later this year. How much does that change the game?
Well, it's really interesting. It tells you a bit about positioning, Lisa. I think everyone was long dollar yen, and we had these comments out of Ueda, but really, if you read between the lines, he's saying it's data dependent. You mentioned if wage and price pressures go the way they want, then maybe they can remove accommodation. It's to me, a very nuanced way of saying, hey, it depends on the data. And to me, the data is not so great out of Japan. Talking about wages, we just had wage data last week from July, much weaker than expected. The wages are not keeping up with inflation. So they're not getting that missing piece of the puzzle. So to me, the question is, well, how is the Japanese data going to go? And to me, it's been weakened. We had orders data out overnight, much weaker than expected. The domestic orders plunged 30%. So it's not just a China external story. Domestic activity in Japan is at risk. And I think that's the reason why, despite all this talk, and it is really just jawboning, the Bank of Japan is likely to be on hold for the foreseeable future.
So what do you take away from that? That positioning is perhaps overly weighted to a weaker yen, or that positioning is such that the reaction that we're seeing today, not just in currencies, but also in the bond market in Japan, is inaccurate and it's going to reverse?
Yeah, I do. I think the underlying fundamentals, again, we go back to central bank divergence. Bank of Japan on hold, the Fed is tightening. And that's going to, I think, really be maintained through year end. The positioning, to me, tells me that you had this sort of violent reaction to what I thought was a very balanced, nuanced comment. He said, if wage and prices go the way we want, then maybe we can remove a combination that's really, quite qualified. He's not saying anything about really promising anything, as any central banker should not at this point. They should be very much data dependent, sort of staying nimble. Anyway, regardless, the violent reaction to me tells me that yes, we're probably the dollar rally has been going strong. Maybe we got a little overextended. DXY's been up 8 straight weeks. So it's time for a little bit of shakeout. But to me, I think it's very dangerous to go short dollars into the CPI and PPI retail sales. To me, the data suggests that headline is starting to creep back up to 3.5%, 4%. Core is stuck near 4%. And that tells me that the Fed's nowhere near done. And I really think the market's underestimating the capacity of the Fed to tighten further.
Winthin, what is your dollar call out a year? I mean, it's an easy question with a really tough answer for anyone right now. What is your dollar call?
Oh boy, to me, a year is like an eternity in the market. That's a lifetime.
Agreed.
So I would say, look, 6 months out, I am very, very confident the dollar continues to power higher. Even between 6 and 12 months, I lose a little bit of conviction. But the way things are going in the rest of the world, the Eurozone's tipping into recession, UK are also tipping into recession, China's struggling. Yes, the U.S. will likely go into recession next year, and that's sort of where my call becomes a little bit nuanced. But if and when the U.S. goes into recession, then that's when the dollars can sort of, I think, start to go down. But we keep pushing that out. To me, it looks like the momentum, Q3 remains strong. It's going to carry over to Q4. So maybe mid-year next year we get a recession. I don't know. It's all anyone's guess. But that's to me is the game change for the dollar. When the U.S. goes into recession, the Fed starts to recalibrate its settings. Now that said, I don't think they're going to slash rates immediately. If inflation is still 3-4%, I don't think they're going to turn around quickly.
Winthin, thank you so much for the brief this morning. Winthin of Brown Brothers Harriman and Claudia Sam coming up, as well as Gina Martin Adams. So we've got a pretty eclectic way to get you to the 9 o'clock hour as well. I love what he said there, honestly, and he's a grizzled pro, about trying to get out a proverbial 1 year. I couldn't write a 7-page, like the way Anthony Dwyer at Canaccord Genuity does. He just throws it out. This is where we'll be in a year. I don't have a clue.
Yeah, I don't think we can game out where we're going to be in 2 days, which is the reason why Wynn was talking about how people are kind of hesitant to really make any big moves. He was saying it's dangerous to go short the dollar heading into CPI and PPI because people are underestimating what the Fed is willing to do.
Well, we'll see what the Fed will do, and I agree. You and John have mentioned this. We've got to get beyond the news flow this week down to the UAW strike on, I believe it's Friday, or I can't remember if it's midnight Friday or midnight Saturday.
It's midnight Thursday. It's 11:59 is when the deadline hits on Thursday.
And so then into Friday.
Okay,
so I'm glad somebody's got this figured out. But,
burning question for you, Tom.
Yeah.
Did you actually subsist on Twinkies?
Yeah.
For years?
They had these
3
fruit
years?
pie things, these fruit pie things that were painful. Smuckers to take out Hostess. It's a blue chip stock. Talk about free cash flow. Thanks, Dad. Futures up 23. Stay with us. Claudia Sam next.
for the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Bloomberg Surveillance. It is September 11th in New York. We welcome all of you. Lisa Bramwitz and Tom Keene, John Farrow will be with you in the 9 o'clock hour. The elite meet to greet in downtown New York right now. We've seen former Mayor de Blasio, many others. The Vice President will be in attendance today as President Biden is heading from India back through Vietnam and will be in Anchorage, Lisa, this afternoon, a different 9/11 for the President of the United States.
In Alaska, rather than New York City, one of the epicenter, or the Pentagon in Washington, D.C., on a day that still feels like it was very recent to a lot of people out there. I think that we cannot emphasize enough how it doesn't feel like 22 years.
It doesn't feel like 22 years. In fact, I would even go so far as to say that it's harder every year for me. I believe this, yes, the Vice President now moving to the ceremonies, which circle around 8:46 this morning. And of course, the first plane striking these buildings. And it's shocking when you read the history again and remind ourselves it was a 17-minute, I believe, differential between the first and the second hit in New York. And I think back then I thought it was like a 2-hour difference, and it wasn't.
And just
17 minutes.
It was. It feels very recent. Just the visceral experience of the fall.
I think both of us struggle with it. Some other people do better, but there we are. And for all of you worldwide, we'll bring you some images of this at 8:46 and through the 9 o'clock hour. We do this with markets open as they opened after 9/11. Futures up 23, Dow futures up 79. In the yield space, higher yields. I'm going to call it, can we say it? I haven't used this phrase, Lisa, in months and months. Dare I say it's a risk-on feel today?
It is an ambiguous feel, I would say. It is a neutral, a strong, aggressive neutral that Keith Lerner was talking about, at least in the positioning.
Neutral.
Exactly, in terms of lack of conviction ahead of a massive week for economic data.
It'll be interesting to see. Joining us right now, Claudia Sahm, who's taking a Victory Lab, founder of Sahm Consulting, former Fed economist. Claudia, you absolutely nailed a good number of months ago would everybody calm down about the recession game. Revisit that call right now. Can you calm down about the recession call, or are there data there within the Sahm rule that says we must beware?
Right. So first of all, no victory laps. I'm not going to do that as a forecaster. It was very clear for well over probably 2 years that we had a lot of the inflation was driven by disruptions from COVID and then from the war in Ukraine. Right. So that's what we're seeing unwind, and markets have reacted well to that, because as inflation comes down, that says the Fed needs to do not as much, and we have lower risks of recession. And we've seen that. And so I understand why the soft landing has gotten popular. And yet I am concerned, right, as I watched the labor market data. So the payroll data, they were averaging 3 months, 150,000 through the last 3 months. That's half of what they were doing early in the year. We have seen payrolls cool off at a really steady clip, and they got to bottom out soon. Right? Like if things keep going south, that is what a recession looks like. So I think we're in this very like hold your breath kind of moment with the economy in terms of now we're going to see, is this normalizing, getting back to pre-pandemic, or are we heading towards a recession?
This is a really important way to crystallize, Claudia, what a lot of people are looking at as encouraging news in the labor market. What about you makes you say it's a hold your breath kind of moment where we're not sure whether it's going to normalize or keep going south?
In the labor market, there's many key pieces that they get momentum going, right? So the unemployment rate starts out slowly and then it builds up steam, right? And we haven't seen the unemployment rate moving up. The SOM rule, the recession indicator, is far from triggering, but that doesn't mean that by the end of the year, we're in a space where it's picked up enough steam and we're in a recession. So the labor market is so important because it really supports the consumer spending, and we've seen the labor market cooling off. We should eventually see signs of consumer spending cooling off. There's been downward pressure on inflation, but it's a really tricky needle to thread in terms of doing just enough but not too much.
Which really feeds into this question of whether what we're seeing with the UAW and some of the discussion around strikes and discussions around getting paid more is something of a rear view mirror, as we were talking about earlier in the show, or whether this is a precursor for what's to come, especially as there is a reglobalization or something of that nature going on. What's your view on that?
I think there's an aspect of it, particularly with UAW, that is a looking backward, right? We've had some years of really strong economy. We have seen big profits by the automakers, and they don't renegotiate these contracts every single year. So now is the time, right? And there's a lot of history. They took a really weak contract in 2009 because the automakers were kind of on the cliff's edge, and now the tables are turned, right? So I think this UAW, I think, is a very backward-looking, and I think it makes a lot of sense why they're asking what they're asking for.
Dr. Somm, there's a modest uproar in the United Kingdom about getting the eco data wrong, and that the eco data was pretty gloomy, and they're reassessing and redoing the math, the statistics, to a more optimistic United Kingdom. Do you have faith in our data? Could we be in for a data surprise out of the good people in Washington?
We need to be very careful about reading too much into a single data point. We're going to get a lot of data this week. You should look at the totality of the data, because if you hang your hat on one piece of data, we got revisions in prior months of payrolls. This has happened all year, right? We think it's strong, and then next month we find out it's not as strong. The New York Fed did some really nice analysis of the PCE core inflation, and there's a good band of revisions. Like right now, we could have something from 3.7 to 4.7. That's a big. That's a big band. So these are things that we need to keep in mind, and the Fed knows these things. Right. Like we think about revisions, but it makes it really hard. Right. Like we don't know what we think we know.
Claudia Somm with us, and we will continue with Dr. Somm. The 9/11 memorial, Mayor Adams with other assembled mayors, including Mr. Bloomberg. I had a sighting of Mr. Giuliani as well, and Mayor de Blasio. Along with them, the vice president and the governor of New York, Governor Hochul, Lisa.
All looking to commemorate a day that feels very recent in the minds of most people in New York in this business, and comes at another pivot point. And we're talking about the economic trajectory of the United States right now. And we remember 22 years ago when this really keyed off a real fundamental economic shift, not just for the city, but more broadly as well. So with us is Claudia Somm, and I want to go there with you in terms of this muddle that we're in, this sense of whether we're going to see some sort of similar turmoil in the data that will really come out in a way that's predictable and how we sort of look at those pivot points.
Yeah, well, I think Claudia Sahm has been really, really good on this. And to review this, folks, she has always been not a skeptic. This is important. But Dr. Sahm has not been a skeptic, but she said dig deeper into the data than the simplistic data, particularly that the financial media has. So I think there's a huge respect, even among elites at the Fed and frankly at other central banks, for the granularity of what Claudia Sahm does.
She was saying that it's a hold your breath moment for the labor market, that there could potentially be a continuation of the decline that we're seeing in some of the momentum and how that could be a real problem. We're speaking ahead of a key week of economic data. CPI on Wednesday, we get out of the United States.
I completely forgot about that. We have CPI on Wednesday.
CPI on Wednesday.
I missed that.
PPI on Thursday, as well as retail sales at a time where people are wondering how long the U.S. can keep having consumers spend to such a degree when savings really do come up.
Yeah.
And this all comes the same week that the ECB has to make a decision, really with a slew of conflict and slowing growth.
Over the weekend, this happened to be a weekend where I did a lot of reading, and the different narratives that are out there are extraordinary. And you say to yourself, within equities, bonds, currencies, commodities, where are they going to fit in? And John was talking about the persistency of iron ore actually showing a China that's not going to end. I mean, for those of you on radio, we've lined up the events of the week, and what's not on there is China. Maybe this is a week where we walk away from China, but I would suggest, I don't hear people talking about 0, 1, 2% Chinese growth. I think there's a more buoyant tone there, even with their financial challenges domestically.
Well, today, or overnight, I should say, heading into the U.S. day, there was some strong credit data published out of China, which raised questions, are we at peak pessimism for China, which might have been part of the reason why the UN was actually responding to some of the jawboning that we heard from the People's Bank of China. I mean, this to me is interesting. Are we seeing signs that things aren't quite as bad?
And to dovetail it in with Mandeep Singh here, the key thing for Mandeep Singh is Apple's supply chain, which is where Mr. Cook created his career at Apple. And that goes again to we're bringing it full circle here to the president visiting Vietnam, just as one example, or maybe the hopes and dreams of India, where there's a complexity here of these stories dovetailing together, and I can't tell you where they're going to be. We're in September. Where are they going to be Halloween, 50 days out when my pumpkins have rotted?
Right, which story is going to be more important? Do you buy a pumpkin early? Is that what you do?
We buy them decorative, and then, we have a carving feast like everybody else. It's embarrassing.
Wait, you buy them pre-painted? You're a pre-painting
I'm not doing the pre-painting thing, but, the vet bill and kennel fee, they got to go out trick-or-treating, so,
What are they going to dress up as? Cats?
Well, they go as cats. One year they went as cats. That didn't work out.
But this is a good point in terms of not really understanding how to game out further what's going to be the predominant story at a time where geopolitics is coming in at a changing sort of economic regime.
We welcome all of you on a September 11th on a Monday. September 11th for us on the weekend is just different. It is about a working day, as it was, with futures up 22, with life going on 22 years out. The imagery is very appropriate for September 11th, but this time is different. At the Pentagon will be the First Lady. In Manhattan will be the Vice President of the United States. The second husband will be in Pennsylvania, I believe. And the president flying back from India in Vietnam, that in itself, some huge ceremony in Vietnam. And to see the president have remembrances here. We'll see this later this afternoon, I believe, in Anchorage, Alaska. So it is a different September 11th, Lisa.
It is a different September 11th. And, we were talking earlier about how long it's going to remain such a front and center kind of visceral feeling. And it just has not faded. And we keep talking about how much that just has been a present feeling. It reconfigured the downtown of New York City. It reconfigured certain aspects of markets, really. And yet, one thing that as we celebrate the sort of opening of markets every day with the ringing of bells, life does go on, and there is that sort of push-pull amid the tragedy.
The hallmarks of our lives, and for those older, very few in remembrance of Pearl Harbor, but the idea of John Fitzgerald Kennedy's assassination and 22 years on from Pearl Harbor was on from Pearl Harbor, 22 years on, was 1963. I find that stunning. When I did that math in my head, I believe it was yesterday, it really set me back here. And we see it, of course, in Manhattan, the beginning of the ceremonies here 3 minutes away from a first remembrance of a first plane striking the World Trade Center with mayors assembled. It was good to see Mayor Giuliani and Mayor Bloomberg there, as well as they lived it.
We're 3 minutes away from the moment of silence. Claudia Sahm back with us for a moment, and I would love just, Claudia, to get your sense of how an economy reshapes following a tragedy, following a massive disruption, and what lessons kind of are applicable today.
Right. Well, we're watching it today with COVID. I mean, we've certainly had national tragedies like 9/11 in the past. It's slow and it's painful. I think many economists underestimate that 3 years ago, we shut it all down, right? And there were a lot of disruptions. And I think, I certainly underestimated how long it would take to get things back on track, the transitory. It wasn't 1 year, it was 2 years. And I think there's a lot of disruptions. We've seen that they're not unwound, and they may not, right? Like they may have a lasting imprint on the economy. But I think mainly it's just we got to give ourselves some time to get there.
Claudia Sahm, thank you so much for rejoining us again today. Dr. Sahm, of course, with all of her work at Sahm Consulting and, of course, with the Federal Reserve System. That reminds me, at least, of the courage of Roger Ferguson. Alan Greenspan was abroad on September 11th, and the vice chairman stepped up big in the absolute chaos that there was through that day and even into the next day, September 12th. Roger Ferguson is the one that solidified the financial system of America on September 11th.
A lot of commemoration today on the anniversary, the 22nd anniversary, when we think back to a time that was so recent, it feels like, in so many ways, that did reshape many aspects of downtown. The pomp and circumstance has grown with the years that have gone on, but really the emotion still very much present, Tom.
Well, we welcome all of you worldwide and across this nation for this set of ceremonies. We saw the Pentagon earlier this morning, and I believe we'll see that later. And of course, Shanksville, Pennsylvania as well. And again, the President of the United States in Anchorage, Alaska. Look for that later this afternoon. It's still emotional. There is a bell in Lower Manhattan. It's every year. I keep waiting, Lisa, for this to get easier, and it just doesn't, does it?
No, it does not. And it doesn't for all the families that were torn apart, and it doesn't for all the people who lost the people with them who loved them.
Mayor Adams lined up with the governor of New York and others. Let us listen in now to this moment of remembrance.
Right, quick, march.
In Manhattan, in New York, a ceremony that we've seen for 22 years. Again, Bloomberg will give you full coverage through the day on Bloomberg Radio and Bloomberg Television of these memories across the nation. We'll listen a little bit more to this beautiful music. Firefighters, police officers as well. A data check here to continue back to our world. The future's up 23, Dow futures up 71, and the VIX 14.16. As we look at the equity markets and where we are in 2023, I can say it was easier in October of last year when Gina Martin Adams said, you have to participate, you have to be in the market. She never said, go to cash. She joins us today at a time where a lot of people want to go to cash right now. Cash is 5% plus, et cetera. There's an allure there. There wasn't there over 16, 17 years.
Right. And it is a very different environment. The equity risk premium is substantially lower than it was 15, 16, 17 years ago. It is a much more difficult environment for investing because of the distortions in the equity market as well. If you look at where the valuation excesses are in the S&P 500, they're almost entirely in the tech space, in the top 5 to 7 stocks specifically, and those stocks are very, very vulnerable at this moment in time, as we've experienced over the last couple of weeks. Any news on Apple, which is the biggest company in the United States, but also now bigger than the entirety of the small cap index in terms of market cap, is going to have a very significant impact on the index at large. So there are a lot of distortions to contend with. It certainly is a lot more difficult this time of this year than it was this time of last year, when investors were all very fearful. Now investors have generally gotten back on board, have been more interested and engaged in the equity market, and that naturally creates much more difficult investing conditions.
Is this a frustrating time to be trying to come up with strategy?
You know, I think that you could say that about any point in time. It's always frustrating. It's always challenging. There are new challenges. Part of the reason I love what I do. It's never the same. Every day is different as an investor. Today's investing climate is absolutely substantially different than it was, especially 10 years ago, right after the great financial crisis. You had an environment of certainty with respect to interest rates that was unique in historical perspective. We had not been through that kind of climate before, at least as an investing generation. And when you have an environment of extreme certainty in interest rates, extreme certainty in terms of inflation and inflation levels, as well as volatility, that creates very different investing conditions than that which exists today. I think the most frustrating thing for most investors today is how generationally different the interest rate landscape is. The inflation landscape that is the backdrop for that interest rate landscape, incredibly contentious and difficult for an investor that's been in this market for 20, 30 years, in which we just haven't seen this kind of climate.
Right now, people are talking about the difficulty in trading ahead of some key data that we get this week. CPI on Wednesday, PPI on Thursday. From your vantage point, how important are those data points? How do you trade around them at a time where it's not going to be one data point that moves the needle for the Fed?
Yeah, so it's different now than it was, say, earlier this year. Inflation became this major turning point for stocks late last year, early this year, when CPI crossed over PPI for the first time in more than a year. Consumer prices were finally rising faster than producer prices. Both are decelerating. So now it's a matter of continuation. That critical turning point was really consequential for equity portfolio strategies, without a doubt, and was a point in time when you wanted to rotate into more cyclically oriented sectors, away from defensive sectors, toward sectors with the potential for more margin expansion, whereas before we were sort of just generally worried about everything. Now it's just, can we continue to see this momentum, which is a very different environment. And frankly, it's a lot more difficult because you don't have these major turning points, these major catalysts for change. It's, will the Fed finally stop? It's, will CPI and PPI continue to improve, which creates actually greater degree of stress and risk than the major turning points, which are the bigger opportunities.
My textbook says I'm supposed to look out 3 years. So if I do the math on Walmart at a revenue growth of 5% per year, I think that's a simple revenue growth of 15%. Microsoft's going to give me, let's say, 11% per year, which is a simple growth, double 33%.
Right.
Why in God's name wouldn't I buy Microsoft over Walmart?
Well, I think that most investors are doing that same calculation and coming to the same conclusion based upon where multiples are. You would assume that that is arguably priced in the stocks.
So are they rich? Is Microsoft or these luxury goods in France and the rest of them, are they value stocks?
They are still growth stocks. They're too rich to be value stocks, unless you get a surprise to those expectations, which I think is increasingly what investors are counting on, is not only am I going to get that 33% growth, but I'm going to see a surprise to the upside from that growth outlook. And that's what's commanding this excess in terms of valuations.
What do your people say? I don't care what, I think, or, what
a lot of it, frankly, depends upon the rate of assimilation of AI and the rate of growth of AI. It's the transition in capital spending.
She has no clue. She's just reading Mandeep.
It's very true. I think we all are. Honestly, we all are trying to understand exactly what the implications are here.
Well, and I think that's what got priced partially into this tech space over the course of the last 6 months is, oh, wow, this is something new. We don't know how to price it, but we're going to presume that it's a lot faster potential growth than we were pricing 6 months ago. What is that faster potential growth is largely going to depend upon how fast those programs get embedded into capital spending plans, how fast they become an integrated part of overall operating efficiency improvements. And these are still TBD, right? We don't know, for instance, how fast a consumer staples or a retail company is going to pull AI into their operations. We have a pretty good handle on technology providers themselves. What we don't know is the rest of the economy and how fast that can improve.
It's a blue chip stock. Hostess was taken out. I lived on Twinkies for there was a 3-year window in the 60s where I single-handedly propped up Hostess. Is Smucker's, do they care? Does Smucker's, Hostess, do they care about AI?
Sure, why not? In terms of their brand value, think about what their intangible assets are on their balance sheet and how important their brand is to them. To the degree that they can utilize AI to assess the degree of brand improvement.
AI's going to help them
100%.
With peanut butter, grape jelly combined?
Believe it or not, because they can utilize this technological advancements to understand their client base better. They can use any form of technology to figure out how to access their market faster. These are all efficiency improvements for these companies. In particular, the brand-centric improvements have huge upside for utilizing AI to figure these things out.
What does it mean to you that some of these deals are coming through right now? I mean, the fact that we are seeing this acquisition of Smucker's buying Hostess, of the idea that Instacart is potentially going public even at a reduced valuation.
Yep.
Are they trying to time the market? How is this playing out?
I don't think they're necessarily trying to time the market. I think it's a combination of things. The first is, one thing to consider is companies are sitting on an enormous amount of cash. And I think that we sort of forget the fact that cash on corporate balance sheets is still near all-time highs, even with debt increasingly accumulating and the cost of debt rising. Cash is still enormous, and it is fueling some degree of transaction value. The second thing to consider is just in an environment of uncertain growth where growth prospects are going to come from, sometimes the best way to utilize that cash or to utilize your balance sheet is simply to buy growth. When you can't invest in it yourself, you have fewer return on investment ideas. Buying growth turns out to be a pretty reasonable opportunity for some of these companies. And then in terms of deals coming to, I mean, we've been through 20 years now of just no deals coming to the equity market. So any deals coming to the equity market are generally pretty well subscribed, in particular deals that are in hot spaces, in growth areas of the market. Deals are going to be subscribed because there is still some demand for equities, public equities, despite popular belief, and there's very limited amounts of supply.
Thank you so much. Gina Martin Adams here with Bloomberg Intelligence here on the equity markets. This afternoon, one of my favorite people, Howard Lutnick of Cantor Fitzgerald, will be with us in the 2 p.m. hour. He has with his son such memories and pain of September 11th, an important annual visit with Mr. Lutnick, always valued by Bloomberg. We're going to leave you this morning with the reading of the names, at least the hardest part here. These kids got bigger.
Yeah, well, yeah, they lost people who they didn't even remember.
They were little.
They were little.
And they're not little anymore. But it continues. Thanks to our team for the imagery today of September 11th. And we'll continue this. John Farrell will have it on television through the 9 o'clock hour, and we'll have it on radio as well. It is September 11th.
Firefighter Gerard A. Barbera.
Paul. How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
They're brimming with sensors. There's several cameras that look out at your world because we're mapping your physical world so we could put the content in there. There's several cameras looking at your eyes so we know where you're looking in your physical world. And that's a lot of data. That's a lot of very personal data. There's a number of other sensors on the device that are needed to make it work in the way it does. So we feel strongly that, first of all, people should know what these devices can do. And since we're at the beginning of the curve, let's work on the right guidelines and put those guardrails in place now versus letting it out of the bag and trying to rein it in, several years from now.
So what rules would you put in place, and who should make up and enforce the rules?
I think it's definitely a public-private discussion, but it's a very complex technology. So I actually spend quite a bit of time in DC talking to folks, saying, just educating them on what it could do. But I think first and foremost, the data that it collects, there needs to be an understanding, the user needs to understand the level of data that it's collecting, and then be the one who says where that data goes.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
This is Bloomberg.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, we start with this quote right here from John Williams of the New York Fed to Mike McKee. Monetary policy is, quote, in a good place. Going into the Federal Reserve meeting next week and going into some important data this week. Equity futures positive here by 0.5% on the S&P. On the NASDAQ pushing higher as well. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, coming up, the Federal Reserve going quiet ahead of CPI data. Secretary Yellen feeling good about a soft landing as President Biden weighs in on everything from China to John Wayne.
Good evening, Vietnam, and good morning back in America. Now, let me also speak to significant business we got done in India during the G20 summit. This was an important moment for the United States to demonstrate our global leadership and our commitment to solving the challenges that matter most. Really what this trip was about. It was less about containing China. I don't want to contain China. I just want to make sure we have a relationship with China that is on the up and ups. China has a difficult economic problem right now for a whole range of reasons. There's a movie about John Wayne. He's an Indian scout, and they're trying to get I think there's Apache, one of the great tribes of America, back on the reservation. The Indian scout, the Indian looks at John Wayne and points to the Union soldier and says, he's a lion, dog-faced pony soldier. Well, there's a lot of lion, dog-faced pony soldiers out there about global warming, but not anymore. All of a sudden, they all realize it's a problem. I just think that there are other things on leaders' minds, and they respond to what's needed at the time. But I tell you what, I don't know about you, but I'm going to go to bed.
We're just waking up. President Biden from the G20 over the weekend. Bloomberg's Anne-Marie Hordern will join us shortly to discuss all things Washington, plus investors bracing. The key pieces of economic data this week, U.S. inflation coming up on Wednesday, retail sales on Thursday, setting the stage for the Federal Reserve and its next rate decision just a week away on September 20th. This as Secretary Janet Yellen expresses fresh optimism that the U.S. will be able to contain inflation without major damage to the job market, saying this: every measure of inflation is on the road down. That conversation still ahead with Citigroup's Kristen Bidderly, along with TPW's Jay Poloski, plus JP Morgan's David Leibovitz joins us at the opening bell as Apple prepares its big iPhone unveiling tomorrow. This after shares fell by nearly 6% last week, caught between the crosshairs of the tension between the United States and China. That's going to be a big conversation for us a little bit later, with equity futures positive here going into that opening bell. But first of all, for us this morning, it's September 11th, marking the 26th anniversary of the 9/11 terror attacks that hit New York and Pennsylvania back in 2001. We honor the victims, first responders, and all of those around the world impacted on that very day with a moment of silence in observance of when United Flight 175 struck the South Tower of the World Trade Center.
Darren Christopher Bohan.
Lawrence Francis Balso.
Vincent M. Bolands Jr.
Tori Hamzavi Bolorchi.
Alan Bondarenko.
Andre Bonhauer Jr.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
This week, we're going to have the CPI data.
CPI. The CPI print.
We do expect the CPI to come in strong.
The headline is expected to be fairly high.
Driven by energy prices moving higher.
We'll see what happens with the core.
Where does inflation finally go?
What some people are forecasting is a rebound in core inflation.
We are expecting the inflation numbers to continue to come down.
Continuation of the positive trend and continuation of the drop feels the most likely scenario.
What does the Fed do with that?
Unless you got something very significant on CPI, I think they're not going in September.
This is a very complicated time for the Fed. The question will become the November meeting. Markets should not jump to conclusion too easily as to what's going to happen beyond September. We'll have to see how the data plays out.
Big week coming up. CPI data coming up on Wednesday. Retail sales coming on Thursday. Setting the stage for the Fed and its next rate decision just 1 week later on September 20th. Joining us to discuss is TPW's Jay Pulosky, Citi's Kristen Bidley. To the both of you, thanks for being with us. Let's start with you, Kristen. Just how hot does CPI need to be later this week to encourage maybe another move from this Federal Reserve?
So I think our expectation right now is that it's going to be in line with market expectations. We know that energy prices have ticked up higher. So provided that we don't see anything outside of what the broader market is expecting, I don't think the Fed's really going to change the trajectory in terms of September. So we think they're going to stay quiet for September, especially given some of the cooling in the labor market that we've seen. But November is really what the market is going to look towards.
Andrew Honhorst and Citi, your colleague, of course, looking for another hike in November. I'd have to ask this question to you, Jay. If the Hawks aren't screaming for a hike this month, are we basically done here?
Yeah, John, I think we are. You put up Fed Governor Williams' comment about monetary policy being in a good place, and we would agree. We're really focused on transitions and what gains traction during times of transition, and we're transitioning in the U.S. and in Europe, we believe, from monetary policy to fiscal policy. And so one of the things we think that has traction is the disinflationary pace, which is taking, which we observe in the United States, Europe, and pretty much globally, outside of actually, funnily enough, Japan and China, where inflation is picking up a bit. Both good things in both cases. But to us, we're really not focused on the Fed. We're focused on the traction that fiscal policy gets in the United States. We think that's going to drive a manufacturing rebound, which supports the economy, supports earnings, and supports risk assets.
So, Jay, over the weekend, Torsten Slock of Apollo put out a deck, a load of slides. Great charts in there, showed delinquencies up, bank lending down, perhaps a reason to sit and wait for this slowdown to come through the pipeline, this further tightening to come through the pipeline from the Federal Reserve. Are you saying maybe those long and variable lags aren't so long, they're not that variable, maybe we've seen them already?
Well, you know, a lot of people, and people I respect, Torsten's one of them, but others as well, talk about the lag reaper and lags and things of this nature. We think the consumer is fine. Household net worth, you know, it just hit a record. Delinquencies are very low relative to history. Credit is not showing any signs of significant problems in the high yield space. Financing last week was a record in the investment grade space. So we're of the view that the economy is going to accelerate. We actually think the Fed is going to double its 2023 GDP forecast next week. And currently, the consensus for U.S. GDP next year is 0.9%. We think that's way too low. And so we expect growth to continue to develop over the course of the coming year. And earnings, again, reflect that, where earnings revisions, another thing that we're very focused on because it drives stock prices. Earnings revisions have moved up, they've inflected higher, and we expect that to support equities.
Jay, I'm going to borrow that phrase and ask it to Kristen. Kristen, is the lagged reaper just around the corner?
So I think what's interesting is that the data here, you can actually find like two very different stories. And I think we've experienced this over the past couple of weeks. So one of the things that we've been looking at is just looking at the personal savings rate. So the personal savings rate right now is around 4.2%. Pre-COVID, that was around 8%. So one of the arguments for a hard landing, for example, is this idea that the personal savings rate and whether or not the consumer has depleted the stimulus that we experienced over the past couple of years, if that has to go from 4.2 to 8, that's going to have a severe impact on the economy. However, I think one of the interesting things is household wealth has massively increased due to the appreciation of home values and also the number of consumers that have locked in historically low mortgages over the past couple of years. And so that would only indicate an uptick from about 4.2% to 6%, which would be much more in favor of a soft landing. So I think you have to look through to all of these nuances and really parse through the data to say whether or not the consumer is strong or not.
I'm having a tough time of passing through the data, Kristen. I've looked at it over the last week or so. I just see tension, conflict, contradictions. I get there's a slowdown beneath the surface in the labor market. Maybe you see that in wage growth. Perhaps you see that in job openings. And then I look at the ISM last week. Fantastic. I look at claims, super low, the lowest since February. Question I asked last week, I'll ask it this week, Kristen. How much weight should I put on one versus the other?
I think this is the argument why, from an investment standpoint, you have to stay very balanced. I think you can make a bull case, for example, The bull case would be one where you say that inflation does continue to come down, that we've seen resiliency in terms of some of this data, that we have seen signs that the labor market is cooling. And I think the most important part is that the recession that many people have been anticipating, maybe we've already seen it from a profit standpoint and what could be viewed as a rolling profits recession, because starting in Q4 of last year, you already had 7 out of 11 sectors in profits recessions. Just in Q2 of this year, you saw 6 out of the 11 sectors in profits recessions. And so I think when you put all of that together, you have a strong stability case. But I think the bear case is one, rates higher for longer. What if inflation is stickier? And so this really requires a lot of patience and a lot of diversification within your portfolio.
Jay, is the outlook for profits getting worse or better?
Much better, John. I mean, it's a fact. It's not an opinion. Earnings revisions have reflected upward. Currently, the consensus for 2024 is about $246, suggesting low double-digit earnings growth. And that's important because valuations, the gain that we've had this year in the S&P has been driven primarily by multiple expansion. Going forward, we need to see that earnings uptick and that earnings come through with that stronger growth as we shift from Fed tightening to fiscal expansion and manufacturing recovery.
Jay, can you say the same thing about multinationals exposed to the slowdown in China, the stagnation in Europe?
Well, one of the things that should help those specific companies, John, is if the Fed is done, as we expect, the dollar rally, which has been pretty strong over the last 8 weeks, up 8 weeks in a row, surprisingly to us anyway, we think that does not gain traction. And therefore, over the coming year, the dollar should weaken relative to the euro. It's at a record low versus the dollar in terms of valuation. Same with the yen, and that will help the multinational companies. And we've done a lot of work at this over the years, and really what drives U.S. companies is what happens in the U.S. Even if they have exposure to other parts of the world, the driver is what goes on in the U.S.
8 weeks of dollar strength into this week. The euro right now stronger against the weaker dollar, on the session at least, at 107.30 going into the ECB on Thursday. Over the weekend, the focus, of course, on the G20 wrapping up in India. World leaders discussing a wide range of topics from climate change to China. This is Secretary Yellen expresses confidence that the U.S. will stick a soft landing, saying this: I think you'd have to say we're on the path that looks exactly like that. Every measure of inflation is on the road down. AMH is with us here in New York City. Anne-Marie, the politician speaking there or the economist?
Well, it does sound like she's looking at the slew of U.S. data, and what that does show is that as inflation is coming down, they are still able to maintain a robust jobs report, and this is really an opportune time for the Biden administration to want to tout this potential soft landing, because, of course, Biden is not just the president right now, but he's looking for re-election next year. So it does seem that we're hearing a more of growing confidence from the administration about sticking that soft landing. Of course, though, Jonathan, Secretary Yellen also talked about the fact that they are monitoring the slowdown and what's going on in China and the potential risks that that might mean to the U.S. or global economy.
Looking for re-election with crude at $87.60 and gasoline prices going in the wrong direction. Anne-Marie, what's the official take from the White House on that now?
Well, it's challenging, and what we did hear from some officials is that they think that what we saw in terms of what Saudi Arabia and Russia did, which was extend those cuts for longer than what was expected, is that they thought the market would stabilize. Of course, the concern is that we're actually past peak driving season in the United States, which was in the summer. So it's very weird that you see gas prices ticking higher, and $4 is what we're nearing towards on the national average. And obviously that is a huge political problem, because every day American consumers will be reminded, because it's right there on the side of the road like an advertisement, that it is expensive to fill up your tank, as it is expensive for other items. Inflation is a key concern for Americans, and they continue to give the Biden administration poor remarks when it comes to handling of the economy.
AMH, thank you. On the latest, a wide range of issues over the weekend. Kristen Biddley, crude, close to 90. How does that square with the slowdown narrative in Europe, in China right now?
So when we're looking at what's happened, I think with crude prices, we clearly saw commodity prices jump around 6-7% in Q3, but they're still below their July peaks. And so we would not chase this recent rally in crude oil. A lot of it is more related to some of the policy driven and also demand side driven. And clearly I would say the major driver of the spike in the price is really what Saudi Arabia and Russia are doing right now. So I don't think that there's a broader macro context here in terms of what is happening in Europe and China. And particularly, I think for anything from an economic perspective for China, what we really need to see is stimulus. And so we need the Chinese government. That's the major catalyst in terms of whether we see that fueling additional rallies within commodities.
Jay, it's not just crude though, is it? It's a conversation we've had before. It's iron ore as well, at multi-month highs. What do you think's going on here?
Yeah, no, John, we'll take the other side of those comments. We're long commodities. We've been adding to commodities over the course of this year. There have been significant outperformer relative to bonds, and we expect that to continue. Yes, it is partly supply driven, but it's also demand driven. China oil imports are up sharply, and we think that suggests that the economy is starting to pick up. We're of the belief that one of the things we need to see, we talked about transition and traction. Obviously, the drips and drabs of Chinese policy need to gain traction. We do not expect the big bazooka stimulus. That's highly, highly unlikely. What we do expect is over the next couple of months, the stimulus policies that have been brought to bear over the last couple of months, there have been many of them, but they've been kind of small, will kind of catch traction together and drive the Chinese economy higher. And look, China is still growing at 4.5%, 5%. Manufacturing PMI was 49.7 last month, up 3 months in a row. Trade numbers last week, which everyone bashed, were actually better than expected and up sequentially. So we're of the view that in the coming months, China is going to reflect a better growth path, and that's going to be constructive for those very commodities that you mentioned. And so we have exposure and continue to hold exposure in the energy, industrial metals, as well as other segments of the commodity space.
Jay, look at that, like magic. You managed to say it and the lights stayed on. Last time Jay Pawlowski was bullish on China, the lights went off. Jay, stick with us. We'll talk about China and input costs a little bit later this morning with Jay Pawlowski and Kristen Bidley. Just want to set the stage for you this morning, going into the opening bell about 11 minutes away. Equities with a lift after a week of losses. The S&P 500 higher here by 0.5%. So equity futures pushing higher. Into the bond market, yields look like this, just a little bit higher as well on a 10-year by 2 basis points. The 10-year yield here at 4.28. The 30-year yield higher by 3 basis points to about 4.37. The New York Stock Exchange and the NASDAQ now observing a moment of silence to remember the terror attacks occurring 22 years ago on September 11th, 2001.
large Chinese technology companies, let's say Alibaba, Baidu, Tencent, they have gigantic market values and they're very prominent in China, not as prominent outside of China as obviously in China, and certainly not that prominent in the United States. TikTok, by contrast, is not in China, but it's gigantic outside of China, of the United States and everywhere. What did TikTok do that enabled a Chinese-based company, parent company at least, to do so well outside of China?
We think it's challenging to build a global company in general, but the best ones we have seen so far are ones that take very consistent global learnings and adapt them to the local countries that they are operating in. So you need to be global and local at the same time.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
Equities higher here. Let's get you some morning calls. First up, Morgan Stanley upgrading Tesla to overweight, saying its custom supercomputer could add another $500 billion to its enterprise value. Next up, Bernstein downgrading Brown-Forman to outperform, highlighting the company's improving margins and accelerating growth outlook. And finally, Baird naming Block as one of their top picks, saying shares are oversold after Square's system outage just last week. Final word now from Jay Pawlowski and Kristen Biddley going into the opening bow 6 minutes away. Kristen, later this week, it really is crunch time for UAW and the Detroit 3. And one question that's dominated this program over the past week is whether that is an example of a hot labor market or just rear view type mirror stuff that we'll leave behind into 2024.
I think it's going to be rear view mirror. I think ultimately when we look at the impact that something like that could have on the overall economy, it's very, very different. And I know there's a lot of comparisons that people are making back to the 1970s when you had unionized labor representing, close to a quarter of all of the U.S. Labor force. Now it's around 8%. And so while that is something that obviously could have an impact, it's something that could lead to stronger wage growth overall. I don't think it's something that is really going to drive a lot of the economic activity and a lot of the market activity into the end of this year.
Jay, which one is it?
Yeah, I would concur with that, John. We're really focused on real income growth, and as inflation comes down, as disinflation takes hold, the consumer is actually generating real income growth, and that's our focus. That is what we believe will sustain consumption and drive a shift from inventory destocking, which is what we've had over the last year, to inventory restocking, and that's what's going to drive the manufacturing rebound we expect to see through the end of this year and into 2024.
Manufacturing up to services and not services down to manufacturing. The bullish outlook from Jay Pawlowski alongside Kristen Biddley. To the two of you, thank you. To kick off the trading week, 5 minutes away from the opening bell. Equity futures pushing higher here by 5 or 0.6% on the S&P. Into the bond market, yields drifting a little bit higher as well on a 10-year yield higher by, let's call it 2 basis points of 4.28. Coming up, JP Morgan's David Leibovitz joins us on why US equities are poised to outperform the rest of the world. That conversation is coming up next. Your opening bell is just around the corner.
don't think we can replicate Tesla. Tesla is a unique because when they found it, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
I think of myself as a realist, trying to see the world as it really is and not the way I'd like it to be. And sometimes I succeed and sometimes I fail in that.
Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Twenty-four seconds away from the opening bow this morning. Good morning to you all. Equity futures pushing forward, up higher, positive by 0.6% on the S&P. On the Nasdaq, up by 0.8%. Looking better this morning. We'll talk about that move in Qualcomm a little bit later in about 5 minutes' time. There's your opening bow. Switch to the board and get to the bond market. Going into CPI later this week. Retail sales later this week as well. That's Wednesday and Thursday, respectively. Yields higher by 2 basis points into that, just short of 430 at 428.60. After 8 consecutive weeks of dollar strength, we pulled back just a touch against the euro. Had a little look at 106 in the past week, 107.35 this morning, positive by 0.3%, and just shy of $88 a barrel on WTI, near the highs of the year, 87.95, positive by 0.5%. About 30 seconds into this session, equities higher by 0.6%, punchy on the Nasdaq. One stock to watch at the open is Tesla. Morgan Stanley upgrading shares to overweight on potential upside from its Dojo supercomputer. The analyst writing this, quote, "The same forces that have driven Amazon Web Services can work at Tesla, opening up new addressable markets." Simone Foxman has the story. Hey, Simone.
Hey, John. Yeah, supercomputer Dojo is being designed to essentially allow massive amounts of data during training processes to be processed by Tesla. And analysts at Morgan Stanley saying it could be worth add as much as $500 billion to the company's market value. Last close, we were at $790 billion worth of market value, so enormous amount of potential value added here. But the Morgan Stanley analyst also writing that it could put Tesla at an asymmetric advantage in a market that's potentially worth $10 trillion. The idea is essentially that it could make the company a software and services company rather than one just simply focused on hardware, by allowing this training data to be processed more quickly. Now, this is particularly interesting, however, because just a couple months ago, back in June, these same analysts at Morgan Stanley, led by Adam Jonas, saying that shares were pretty fully valued there around $265, but now putting a new price target, $400 on the stock. Shares, of course, in the moment about $261, up about 5% in today's early trading. John.
Simone, thank you. That 5% move in the first 2 minutes, that works out roughly $41 billion of extra market cap for that name right there, just like that. Turning to big tech, 2 names for you, Apple, Qualcomm. Apple is extending its agreement with Qualcomm for 3 more years, signaling its own chip isn't ready. The chip maker stating this agreement reinforces Qualcomm's track record of sustained leadership across 5G tech and products. Ed Ludlow has more. Morning, Ed.
Yeah, good morning, Jonathan. The piece of technology is the modem that allows iPhones to connect to 5G networks or prior generations of lower scale network. And this deal runs for iPhone for 2024, 2025, and 2026. You'll remember, John, that Bloomberg's reported that in-house, Apple has been working on its own modem along with its other proprietary silicon strategies. And the story here is that doing it yourself is difficult, particularly when you want your modem to be able to connect to the latest generation network, 5G, but also work across jurisdictions. And, you know, what's interesting going into this Apple event tomorrow, and I think you and I will talk about this later in the program, is that we believe the iPhone 15 that was to be launched tomorrow would be the last generation that used a Qualcomm modem chipset. Well, based on the agreement that's out this morning, that is not the case, and Qualcomm will be the modem supplier for the next 3 years and 3 generations of iPhone to come. Financial terms were not disclosed, although it was indicated by Qualcomm that the agreement in terms of dollar volume or dollar amount is the same as their prior 2019 agreement. You and I have talked about what drives an upgrade cycle. We used to talk about the 5G super cycle. One thing that analysts point to is that this is pretty bullish for Qualcomm, bearing in mind that it won't be that long before we talk about the 6G super cycle and what that might mean to keep Qualcomm in this position as the pivotal supplier to Apple.
You know, we're discussing this in about 10 minutes' time. You also know that I want your view on that last story. Adam Jonas, that call over at Morgan Stanley. And I know you've read that. What did you make of it?
Yeah, look, it's really interesting because Adam Jonas first came out with this thesis in 2015, right? That the long term of Tesla would be very different to just being an electric vehicle maker. He saw them as offering a service akin to an Uber or a Lyft, a rideshare service where Tesla controlled its own fleet of vehicles and the proprietary software. Fast forward to 2023, and that's not quite reality. But in all the conversations around NVIDIA and them having the leading GPU for AI and training large language models, we were talking about Dojo in the context of training data, neural networks before NVIDIA. It's an area that Tesla has some competence in. They've pledged to invest about $1 billion in R&D to continue doing that. And, you know, the point that Jonas is making is that it opens up more end-user use cases, the ability to sell software services at a greater scale. So 2 things. Caution on Adam Jonas's history of making big predictions, but also credit to Tesla in the work they've done in proprietary silicon and in computing.
Helping to lift this market as well. Tesla up by 5% or so. Ed, thank you. Big move on the NASDAQ, up by close to 1%. On the S&P 500, up by 0.75%. That move on Tesla, potentially the best move of the month so far for Tesla. Sticking with tech, Citi expecting shares of Microsoft to outperform, saying this: the stock could trade well into earnings with a stabilizing PC market and accelerating revenue trends. That stock up also by 1%. Some big calls out there for tech. I want to turn to M&A. J.M. Smucker agreeing to acquire Hostess Brands for $5.6 billion. The Hostess CEO saying this: we believe this is the right partnership to accelerate growth and create meaningful value for consumers, customers, and shareholders. Isabel Lee has this one. Hey, Isabel.
Hey, John. So investors will get $34.25 for each Hostess share, and that's a 22% premium from Friday's close. And shares of Hostess, which is the Twinkies maker, has surged more than 26% since before August 25, and that's the day that Reuters first reported that they're exploring a sale. So company sees the deal adding to an adjusted EPS in the first fiscal quarter, and they expect it to close in the third fiscal quarter. So that's around April 2024. So Bloomberg Intelligence says this acquisition may revive growth in the consumer division, and bakery goods have soared during the pandemic, and Hostess holds around 19% of that market share. As for Smucker's, it's fallen around some 11% year to date. But here's one thing I learned, John. Smucker was founded in some 126 years ago by Jerome Monroe Smucker, selling cider and apple butter door to door in his horse-drawn wagon. And now it's a $14.5 billion company. For now, those shares are lower by around 8%, while Hostess is up around 19%.
And now they're getting a piece of snacks that have no expiry date. Is that right?
Probably. I actually don't eat that a lot.
Extra long shelf life. Like 20, 30, something like that. Isabel, thank you. The latest there on that story. I want to turn to the media space. One question. Bills Jets. Can you even watch it tonight? The contract dispute between Disney and Charter could leave New Yorkers in the dark for tonight's game when the Jets take on the Buffalo Bills. New York Governor Kathy Hochul and Bills supporter is pursuing repayments for subscribers, saying this: it's simple. If you pay your cable bill, you deserve to get the services you pay for. Abby has more. Abby.
Hey, John. Well, that does seem like a reasonable proposal by Governor Kathy Hochul, although I'd almost be willing to bet that she might no longer be in office by the time that made its way through Albany. Now, putting all of that aside, of course, we're talking about a financial feud between Charter Communications and Disney. On August 31st, Disney pulled ABC, ESPN, and some of its other channels from Charter, which owns Spectrum. So you have 15 million people across the country that are not going to be able to watch the Jets' opening season game. Now, in normal seasons, this might not mean all that much. We all know, even I as a non-football person knows, that the Jets is pretty beleaguered. They have not been in the playoffs since 2010. That's the longest drought for any team in any major sport here in the USA. But we have Aaron Rodgers joining the team, so everybody wants to see this game. So you have folks, especially here in New York State, 1.5 million people who may not be able to watch this game. Now, of course, they can sign up for other streaming services. Bars here in New York are really excited for the business as folks come in to see this game. But you have this financial feud, again, where Spectrum is claiming it offered Disney a fair deal to carry its channels, but Disney demanded an excessive increase in price. There's no end to the blackout. On the year, John, Disney down 6.1%, Charter up 25%. This, of course, as Disney works to go through some of the kinks, including its struggling TV business.
Abby, thank you. If New York sports was a stock right now, it would not be doing well at all. About 9 minutes into the session, equities positive by 0.6% on the S&P. JP Morgan's David Leibovitz weighing in on the road ahead for markets and writing this: growth is proving to be resilient against the backdrop of significant monetary tightening, suggesting that a tension between growth and inflation is beginning to materialize. David joins us now for more. David, can we start there? Can you start on that tension between growth and inflation? What do you mean by that?
Absolutely. So, you know, if we go back to the beginning of this year, everybody thought that the second half of 2023 was going to be particularly challenging from an economic perspective. And what we've seen in the event is simply more resilience in the growth data, and that's continued throughout the third quarter, which obviously makes it difficult for inflation to return to where the Fed would like it to be. You know, I oftentimes think about inflation as being like economic sweat, right? You end up with inflation when you're running an economy above its trend rate of growth. We estimate trend in the United States is somewhere right around 2%. And so the 2% plus growth that we've seen this year, we believe is going to make it a little bit more challenging for inflation to get back to where the Fed would like it to be.
What's the stubborn inflation trade then, David? Where do I want to be?
So I continue to think that the Fed will stay higher for longer, and so we continue to see opportunity in shorter duration fixed income. On the equity side, we think you want to lean into value, right? These are more cyclical companies. They tend to be more sensitive to the overall pace of growth, and so we want to take advantage of that window while it remains open.
Do they leave me exposed to the international story if I was trying to avoid the slowdown in China, the stagnation in Europe? How would I go about doing that?
Sure. So, you know, I think value is interesting in the sense that, you know, on the one hand, you have things like energy and financials. On the other hand, you have things like utilities and consumer staples. And so we would be leaning a bit more into the defensive parts of the value complex. But as you and I chatted about, I think last week, with energy prices at $90 a barrel or oil prices at $90 a barrel, there's arguably a story there as well. And so it's more about picking and choosing within value as opposed to embracing the style as a whole.
David, on crude, and you're right, we did talk about this last week. Let's do it again. What do you think that speaks to? 91 Brent, 88 WTI.
So I think at the end of the day, there's an issue on the supply side and an issue on the demand side as well. We're seeing, if we start with demand, we're seeing growth in places like Europe and China obviously come under pressure. But, you know, here in the United States, things are still progressing relatively nicely. And so while pockets of demand may be rolling over, we're not seeing demand in general or in its entirety begin to show material signs of weakness. At the same time, you have limited supply. And I think that that's really been the story as of late. late, right, with OPEC and other oil-producing nations cutting back on the amount of oil that they're supplying to the overall market, that's pushed prices up to levels that haven't been seen in quite some time. And we can't forget about the United States, right? We obviously generate more oil here, produce more oil here than has been the case in the past, but do we produce the right type of oil? And that's why I think you're seeing diesel prices in particular move aggressively higher.
That's a great point. Close to record output. The latest number, 12.8 million barrels a day in the United States, getting closer and closer to 13. David, when we put it all together, what's the preference at the moment? Domestic, US, or international?
So we would be leaning more into the U.S. relative to the rest of the world. You know, when we look at what's happening in China, and it kind of feels like policymakers may have their hands tied in terms of stimulating that economy in a more effective way. You look at Europe, cracks are beginning to form. You know, inflation is stubborn, but growth is in the process of decelerating. And so, you know, the U.S., it's not perfect, but arguably it's the best house on the worst block. That's where we would prefer to hang our hat. And within the United States, we do have a preference for large caps relative to small caps. We do think that volatility is going to pick up here as we get closer to the end of the year.
And some of these great brands just caught in a rock and a hard place at the moment, between a rock and a hard place. I'm thinking of Apple. I know you can't speak directly to that kind of name, but David, the exposure to China at the moment, what kind of exposure are you and the team looking to take?
So when it comes to the China story and the underlying exposures, I think that there are two ways to think about that aspect. One is the exposure on the supply side, right? Does a certain business make a lot of things in China? Two is exposure on the demand side. You know, how much of a market does China represent? And, you know, as we've seen with some large technology companies as of late, you know, the demand side is real. And so I think we need to be tuned in particularly to regulatory risk going forward, because, you know, if I was a betting man, my best guess would be that we haven't seen the end of the trend that's kicked off here as of late.
I think most people sitting at home nodding their head agreeing with you. David, thank you, sir. David Leibovitz there of JP Morgan. Speaking to some of the tensions around the story with Apple over the last week, that stock down last week by close to 6%. Coming up, Apple preparing to launch its next iPhone.
What continues to come out of Cupertino is the gold standard. This is a mini super cycle, despite a lot of the bears coming out of hibernation mode, you know, after Apple's run.
That conversation up next.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
I know one of the reasons you're here in Marrakesh and in Africa, because you see the enormous potential this continent has as a source of renewable power for electrolysis, right? That's the process by which hydrogen is extracted from water. Tell us about Africa's potential.
Africa's potential is the best in the world, and it's Africa's shot now. It's Africa's turn. You know, what will stop Africa rightfully taking its turn will be lack of progress on technology. Companies and governments around the world choose Fortescue because we are the world leaders in technology, world leaders in next era electrolyzer design, cables, solar, you know, all the tech which is moving our world on from having to rely on, you know, dinosaur era fossil deposits of oil, coal, and gas to simply today's era of machines which make machines to harness all that beautiful renewable energy and give all the mobile energy, all the fixed energy this world could ever need by many times, those countries who resist that are denying Africa their opportunity. And I'm saying, stop it. Let's get in behind Africa.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
They've gained in that increment 125 million users over the last 2 years. 250 million iPhones have not been upgraded in 4+ years. And if you look at this special chip camera technology and what continues to come out of Cupertino is the gold standard. And that's why I believe, especially with a lot of big carrier discounts, this is a mini super cycle, despite a lot of the bears coming out of hibernation mode, after Apple's run.
They came out of hibernation big time in the last week or so. Dan Ives of Wedbush reiterating his bull case for Apple ahead of tomorrow's big launch event. The company preparing to roll out the iPhone 15 along with their newest smartwatches and AirPods. This coming as Apple extends an agreement to get modem semiconductors from Qualcomm for 3 more years, a sign that its effort to design the chips in-house is taking longer than expected. Ed comes back with us for a little bit more. Ed, big day tomorrow. A lot of weight on the shoulders of Mr. Cook going into this launch.
Yeah, and you and I won't know if this is a mini upgrade cycle until after the fact, but what we're expecting is 4 variants of the iPhone 15, 2 base models, the 15 and 15 Plus, 2 Pro models, the Pro and Pro Max, and as Dan Ives was talking about, a big focus on the Pro lines, on the silicon updates and the camera technology. So on the iPhone 15 Pro and Pro Max, we expect Apple's A17 processor, its latest generation processor, along with a UWB chip, RF chip for short distance connectivity. On the camera side, we're expecting not just software upgrades, but also optical hardware upgrades, particularly on the Pro Max, that will take it from a 2x zoom to a 6x zoom. These are substantive hardware upgrades that we haven't seen in recent refresh cycles. On the design side, titanium sides to the Pro line, as opposed to aluminum or steel, a sort of higher quality but lower weight product. And then again, updates to iOS, along with some kind of more minor updates to the Apple Watch series, and then USB-C connection coming to the AirPods. The timing of this Qualcomm announcement this morning really interesting, because we believe that the iPhone 15 lines to be announced tomorrow would be the last generation that Apple relied on Qualcomm's modem. That's clearly not the case. This deal between the two runs through to the 2026 edition of iPhone. And as you said, it's evidence that making it yourself is hard. Apple isn't quite there with its internal work on the modem. Qualcomm has the best chip at connecting to 5G networks, and it won't be long before we're talking about 6G networks. Just real quick, John, on silicon, the base models of iPhone 15 and 15 Plus, they'll have the A16 processor, which was in the 14 Pro lines. So they're just recycling their tech from those Pro last year and moving them to the base model this year. Gosh, that's a lot.
Speaking of challenges, just away from all that jargon, just for a moment, the 2 big challenges in the past week: 1, Huawei, 2, China, and China specifically banning phones at the government level and maybe across the state firms as well. Ed, what do you think is the bigger issue for that company at the moment?
Yeah, look, I still go back to what Apple told us in the earnings call, and I'm surprised that more people aren't speaking about this. China was a pocket of strength in a broad, weak quarter for Apple in the June quarter. It was a record in China in the June quarter. They swung to 8% top-line growth in China from a 3% decline the prior quarter, and they attributed it almost solely to switchers, consumers in China buying an iPhone for the first time or switching from a non-iPhone or non-Apple brand. So my question to the market is, does this Chinese government action impact the psychology of the consumer there such that it outweighs the hardware upgrades that are coming in 15? It's still such a key market. So the impact, we don't know what it will be because we can't quantify how many users are sprinkled across these government agencies. But it's worth asking the question.
I'm asking precisely the same thing. Ed, thanks for being with us, mate. We'll catch up with you tomorrow. Let's stick with tech. Oracle earnings coming after the closing bell. Investors focused on whether its cloud unit can continue gaining market share. The analyst over at Mizuho had this to say: despite the uncertain macro demand for back office applications remains robust. Anurag Rana of Bloomberg Intelligence joins us now for more. Anurag, what can we expect a little bit later?
Yeah, I think we should expect decent growth on the back office cloud applications. But to be very honest, the biggest question is what is going to be the cloud infrastructure growth, because that's the big number that surprised everybody last quarter. It grew 77% in constant currency. And that's where I think the bulk of the call is going to be around that particular product and how it's gaining momentum in an area where Amazon and Microsoft are, the growths have been slowing down in the last 12 months.
We'll get your reaction a little bit later today. Anurag, thank you. That stock is down by a little more than 1%. Those earnings coming after the close. About 22 minutes into the session, equities advancing here by 0.4% with some sector price action. Here's Abby.
And that gain for the S&P 500, John, is the best day in the month of September. Right now, not surprisingly, we have most sectors higher, led by consumer discretionary up 1.6%. Tesla is greater than 5% gain on that Morgan Stanley call, really helping out there. Tech overall, though, down slightly. Industrials also down. Over the last couple of months, John, in fact, in this quarter, one of the best sectors, energy. It's heading to its only up sector this year, and the best sector since December of last year, up 12%. Really a turnaround there.
There we go. Abby, thank you. Coming up next, your trading diary, stacked week just around the corner.
Maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
So far, so good. Early days, I know. 25 minutes into the session, equities advancing here by 0.5% on the S&P. The Nasdaq looking okay as well, going into a key week again for Apple and that launch of the iPhone 15 just around the corner. That's the equity price action. Here's the trading diary. Coming up, President Biden delivering remarks in observance of 9/11. That's at 4:45 Eastern from Alaska. Tuesday, Apple's launch event from Cupertino, California. Wednesday, we'll get US CPI data. Thursday, initial jobless claims, US retail sales, and an ECB rate decision. And finally, the UAW strike deadline with Detroit's Big Three. Big week ahead. From New York City, this was the Countdown to the Open. Thank you for choosing Bloomberg TV. This is Bloomberg.
crucially important. And I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure. For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally. We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
We got a lot of green on the screen here, but the volume is light.
We constantly underestimate the strength of the U.S. consumer.
This is a market that's much more optimistic or bullish than maybe the central bankers are.
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
The supply chain has still got dislocations globally and here in the U.S.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Monday, September 11th, as we remember 22 years later. Coming up, we're going to check in with Mandeep Singh. He's a senior technology analyst at Bloomberg Intelligence. We're going to run through some of these IPOs that are going to hit the tape over the next week or so. Instacart, ARM, kind of get a view of kind of where they are standing right now. And then we're going to take a look at real estate. Always a tough business here. Rick Caruso, CEO Caruso Affiliated Holdings, joins us to talk about commercial real estate and the outlook for markets given where these mortgage rates are and where valuations could be as well. Plus, Ethan Devitt, a good friend of ours, CIO at Moneta, she's going to join the show and break down her outlook for these markets. But first, let's kick this whole thing off with Mr. John Tucker.
All right, we'll make this one quick. Stocks higher, but pairing some of the earlier gains in the S&P 500, 9 of the 11 major industry groups, they're higher right now. Consumer discretionary leading the charge. That's where you're going to find most active. Tesla, with the biggest weighting in the S&P 500, shares of Apple. They've renewed a deal with Qualcomm. That's seen as an admission that its own chip isn't ready for prime time. And among the data this week will be the consumer price index and also retail sales. We get that later in the week. Right now, the S&P 500, 16 points higher. That's up 0.4% at 44.74. The Dow Jones Industrial Average, 72 points higher. That's up 0.2%. The Nasdaq 100 right now up 90 points. That is up 0.6%. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, and we are streaming live as well on YouTube.com. You can search Bloomberg Global Radio there. So, Matt,
September 11th, we observe, as we do every year, throughout the morning, as they do across Manhattan, Pennsylvania, down in Washington at the Pentagon. So we've been doing that this morning and looking at the markets here. Again, a little bit of a lift to the tape here today, Matt. S&P up about 17 points, so we'll certainly keep an eye on that. 0.4%. NASDAQ kind of doing a little bit better here, so we're starting to see some movement there coming back in some of those tech names. Right now, let's take a moment of silence in observance of the time hijacked Flight 93 crashed near Shanksville, Pennsylvania. All right, that was just a moment of silence, again, in observance of the time hijacked Flight 93 crashed near Shanksville, Pennsylvania, on this 22 years after 9/11, 2001.
Yeah, it does. To me, it feels like a lifetime has passed. You know, I heard some people talking this morning saying that they feel like it was, you know, still very recent, and I'm sure the hurt is still very real for especially those who lost loved ones. I know that Tom's going to talk with Howard Lutnick a little bit later on today, which is always fascinating as well as a little bit painful, you know, because that whole business was affected so deeply.
Anna Fitzgerald,
but it does seem like so long ago. I was talking to a younger colleague this morning who reminded me, we didn't have, not only did we not have iPhones, we didn't even really have smartphones at the time. That was at the sort of dawn of the BlackBerry. So technologically, so much has changed in the last, you know, 2 decades and 2 years.
Yep, and I will just point out, like I do every year, the memorial down in Lower Manhattan, they did such a wonderful job there, and I highly recommend it to anybody coming to New York City. Is just really a wonderful experience. They did such a great job with the memorial in Lower Manhattan. And then they've also done a great job, a momentous job, really over the last 20 years of rebuilding Lower Manhattan into something. So it's just extraordinary. So again, folks visiting New York City, you got to put that on your to-do list, of course. I think at least a half a day, if I were a tour guide, is kind of what I would allocate there. Markets, a little bit of green on the screen here. Let's check in with Bailey Lipschultz. He covers all the markets for us. What's happening out there, Bailey?
Yeah, major averages trading higher, led by tech. Obviously, we have a nice slate of economic data. Looking at the best performer, though, in the S&P, Tesla up 7% this coming after Morgan Stanley upgraded the stock, saying that Dojo will boost Tesla's value by $500
what is Dojo
billion.
again?
I don't know. I mean, have you seen the Barbie movie yet?
Yeah. No, I haven't seen the Barbie movie.
Okay, so Ken, I don't want to ruin it for those who haven't seen it, but Ken.
It's been out for a few.
Which I don't think Ken has a last name, so just Ken. When he starts to celebrate the patriarchy, he talks a lot about his Mojo Dojo Casa House.
All right, so we'll pay attention to that.
Did you ever watch Dexter's Lab, though? Mojo Dojo was the villain.
No, I did not. I don't even know what you're talking about. What is it? Dexter's Lab?
No, Dexter's Lab.
Oh, Dexter.
Cartoon Network.
I did not. No.
Villain Mojo Dojo. Anyway, though, according to Morgan Stanley, the fact that the Dojo deal will give them an edge in AI and self-driving technology. So when you're looking at that, opening up, at least according to Adam Jonas, could open a new addressable market. He's comparing it to what AWS did for Amazon.com, which we know kind of rebuilt that company.
Dojo is the supercomputer. It's
now we're talking.
In a sense,
That's
it's their AI play, right?
Hey, Walter Isaacson's out with a new book tomorrow.
Cannot wait to read that.
So you're down for that, right?
Oh, yes.
Because he did it. Now, Walter Isaacson, he also did the book
Steve
on Steve
Jobs.
Jobs. Yeah, that was awesome.
Yeah.
So I'm assuming he's going to do a comparably good. But I'm like, do I care about Elon Musk?
I mean,
he's
maybe
the richest
you
guy in
don't.
the world. I don't know. But this guy's such a great writer.
I'm hopeful that fewer people care, you know? But unfortunately, I'm one of those who does.
Okay,
so
you're going to rush out.
And you know what, to be honest, I feel like no matter what you think of Elon Musk now, he has changed the world.
No doubt.
You know, not just with PayPal, which was, you know, the first major move that he made, but then with the electrification of cars. I was just reading Monica Raymond's story, our fantastic Volkswagen journalist out of Berlin, and basically Tesla, together with China, is taking down what was once the world's largest car maker. I mean, they are, everybody from Volkswagen to General Motors to, Mercedes-Benz, everybody has to change his playbook.
Because of Elon?
And probably should have, 10 years ago. I mean, the question for me for so many years is, why are they so late?
Yep.
And now the question is, how come they can't do better?
Yep. So we're going to have some reporting on that coming up. So we'll stay on that story. But the folks like Kevin Tynan would say, hey, when they can make money making these things, they'll make them. That's kind of the thinking out of Detroit now.
Well, unless they can't catch up, right? Because this has been the problem with Tesla. Remember, with Volkswagen, Herbert Diess wanted to invest, I think, $80 billion in total to try and catch up with Tesla. Now they've sunk those costs, and they're not doing it.
But all right, we'll see how that goes. All right, Apple, it's a big week for Apple, Bailey. So they're going to be putting out the new iPhone 15, I guess, Tuesday, 10 a.m. California time. This might be a big deal for them. I mean, I'm trying to read what the analysts are saying, but because I'm even thinking about upgrading here to the iPhone 15, so that makes it a big deal in and of itself.
Paul's still on the 11.
I finally upgraded, though. I went from the 8 Plus, which had the thumbprint, to now I have the 13 Pro Max, 14 Pro Max, whatever the
So you're
newest
done
and
for a few
greatest.
years.
Oh, I'm locked in for like 6 because I'm too cheap. But no, it'll be interesting to watch that. And we also had the news coming out that they renewed their Qualcomm deal. So Qualcomm outperforming, Apple underperforming this morning. A lot of positioning around that, but basically showing the new pact will cover smartphone launches 2024, 25, and 26, which is a big deal for Qualcomm, and that's why the stock's up 3% this morning.
And a bummer for Apple, because it kind of shows they're not really there where they should be either.
Yeah, they've been talking up that transition to an in-house developed chip, which they were able to do with the Max successfully, but it does seem like the iPhone, which is their big moneymaker and the thing that I continue to buy sporadically, is
I'm just going to wait till Mark Gurman tells me to upgrade. When he or Anurag Rana tells me to upgrade, then I'll upgrade. Because they're smart people.
Smarter than I am.
So I need a phone guru.
I would listen to Mandeep as well.
I'd listen to Mandeep. Occasionally.
So there's 3 people that we would listen to.
There's 3 people that we listen to. All right, Billy, thanks so much for joining us there. Billy Lipschultz, he covers the markets for...
Oh, we didn't even get to the Instacart and
we're going to do that here with
ARMS.
the pros. We're doing that with
nice.
Mandeep.
Cool. Yeah.
So that's why we bring Mandeep in here, because he's the tech guy along with Anurag Rana and the team there at Bloomberg Intelligence, a global tech team, which Mandeep now runs with an iron fist, I am told. Mandeep, talk to us about these IPOs. Totally 2 different companies, ARM and Instacart. How do you view ARM? Because that's kind of the one I think that's kind of got people's attention in the sense of, is this an AI play or isn't it?
Well, so ARM clearly has a history in terms of, being that core part of how AI has evolved and how chips have evolved, because they are the IP providers when it comes to computing and all the advancements that we have seen. And what they have told us is they have increased the royalty revenue. So basically they have increased the prices, and everyone is on board in terms of paying the higher prices for their technology. So that's a good sign ahead of the IPO. And I think from what we have gleaned so far, the IPO has been oversubscribed. Clearly, everyone believes this is a technology that's not going away. It can be replaced. And hence, even though the growth was slow, the fact that they can raise prices like this, it's a good sign ahead of the IPO. Instacart, on the other hand, completely different ball game. Marketplace business. We know all the marketplace businesses haven't done very well, including Uber and Lyft since the IPO.
But the marketplace business, is Amazon a marketplace business as well?
Yes, Amazon is a 2-sided marketplace. Instacart is a 3-sided marketplace where you've got all the grocery kind of providers, you've got the shoppers, and then you've got the consumers. The problem, and ride sharing, for example, is a 2-sided marketplace. You only have the consumers and the drivers. So it's not a 3-sided marketplace. The problem in a 3-sided marketplace is your take rates are much lower because you have to split your take rates through 2 other providers. In a 2-sided marketplace, it's a higher take rate. So
fascinating.
Instacart's business, the unit economics look a lot better than some of the other providers, whether it's DoorDash or Uber, simply because they layer a lot more ads. For every $1 in transaction revenue, they make about 30 cents in ads. That's phenomenal for unit economics. problem is the top line is decelerating. They have flat order growth. Marketplaces are scale businesses. Once your top line slows, even if you make 30 cents on a dollar for ads, that's not good enough because your scale isn't growing. And that is where I think they're pricing the IPO appropriately to reflect that slowing.
That's good bet if you feel like COVID's coming back, Paul.
I do not.
I know, but I'm saying if you do,
do not,
because that would grow their top line.
That would
masterfully.
That would,
at least for a
Maybe
moment.
there was a pull forward during the COVID time. I mean, all these companies grew 100% plus triple-digit growth.
So I guess for Instacart, one of the real questions will be valuation. So just walk us through kind of where this thing was valued at its peak when people were going nuts getting stuff delivered home to maybe where it is now.
Yeah, so at its peak, it was around $39 billion valuation in 2021, and that's when,
See, this is what I say, being an old codger Wall Street guy. That's Silicon Valley valuation. That's the kids. Then when you want to come to the public markets, then you got to talk to people like me. That's what happened here.
Well, I think back in 2019 when Lyft went public, they went public at a $20 billion valuation. They raised more than $2 billion in an IPO. Right. Well, clearly things have reset completely now, and I think
they're worth a fifth of that now.
No, Lyft is worth a gajillion. I mean,
they're worth a fifth.
Yeah,
exactly.
I thought Mark Uber. Yeah.
So I think that's where Instacart clearly the valuation is a lot more reasonable now. I can see the IPO pricing maybe revised upward to around 10 to 12 billion. Based on the initial pricing, it's more 8 to 9 billion. I can see it being revised slightly higher because of that ad revenue. And if they can convince investors at the roadshow that the top line will re-accelerate, because right now, as I said, it's flat order growth. That's not good news when you're, a growth story. So clearly that top line acceleration is key, but the unit economics, as I said, for Instacart look a lot healthier than all the other marketplaces, including DoorDash and Uber.
I'll tell you what, Paul, I'd rather get into IPOs in this climate than during the Lyft and Rivian, the heady days of massive valuations. Because now we're also pessimistic about everything, right? Yeah, now you have Mandeep coming on going, the top line's not going to grow very much. They're going to have to cut what they are actually worth by like 4 times. And back then it was who knows? The sky's the limit, So at least now you can get in without that irrational exuberance.
I'd rather be a momentum investor than a value investor any day of the week because I don't have to be right on the names. I just have to jump on the mo. Here, I gotta pick the name right. I gotta pick the valuation right. I gotta be all kinds of right. So, is this the beginning, Mandeep? I mean, this is gonna be a down round, to put it in the parlance of private equity and venture
for all
capital.
of them, right? For ARM, for Instacart, for.
So, does this open up? I kind of feel like there's a stigma. There is a stigma to not doing down rounds, but now we're going to have a couple notable names doing down rounds in the public market. Do you think that's going to have an influence on the other companies to maybe consider IPOs?
There will be, and look, you're not going to see a lot more delivery companies come to the scene now. Now the market is consolidating. That's good news for the ones that are left over. So previously you had GoPuff and every new company coming to the scene trying to figure out delivery. Well, those days are over. I think VCs are quite cautious about investing in this space altogether. And I feel once you have consolidation, which is what we are seeing with DoorDash, Uber, and to an extent Instacart, that probably will be good for the unit economics of these companies.
ARM said to consider, here's a Bloomberg story, ARM said to consider raising IPO price range. How about that? That's like the old days.
Yeah, but that's because they've already brought it down by so much, They had their own owner buy a stake in them that it essentially already owned for far more than what they're going public for now.
So is this, ARM is this week, right? Like maybe a Tuesday pricing, Tuesday night for Wednesday trade?
Yeah.
That'd be really interesting to see how that trades. Silicon Valley in general, is it still all AI?
Right now, it's all about generative AI. This year is the year of generative AI. You can lump in chatbots as well and just overall large language models, foundational models, which is why the Apple event, if they don't talk about generative AI at this event, they clearly have a problem because that's what everyone is hoping for, that Apple, $3 trillion company, hasn't mentioned generative AI even once in their earnings call. Yes.
Why is that, 30 seconds?
Well, because they probably haven't built their foundational model yet, and they are focused on privacy. When you think about large language models, it's built on big data sets. Apple is a company that has always been focused on privacy, and that is what makes them hard to build their own large language model like a ChatGPT or.
All right, we're going to have you in again on this one because I mean this kind of could be existential for Apple if they don't, at least in the minds of investors.
Dude, this morning Gina Martin Adams on Surveillance was talking about how important generative AI is for a brand like Hostess.
Exactly.
If it matters to Twinkie maker.
That's what I say. When you hear Tom Keene mention Twinkie and AI in the same sentence, you know something's up. All right, Mandeep, thanks so much for joining us. Mandeep Singh, he's a senior analyst. He runs all of our technology research. We have tech analysts literally all over the globe, Europe, North America, and of course, Asia. And Mandeep kind of runs that business for us, and we appreciate that. At Bloomberg Intelligence. This is Bloomberg. Let's go to Lisa Mateo for some company news.
Thanks, Paul. Apple is extending its agreement with Qualcomm for 3 more years. It's a sign that its own chip isn't ready. The news comes a day before the tech giant gets ready for its big product launch. More from Bloomberg's Ed Ludlow.
The story here is that doing it yourself is difficult, particularly when you want your modem to be able to connect to the latest generation network 5G, but also work across jurisdictions. And you know what's interesting going into this Apple event is that we believe the iPhone 15 that was to be launched tomorrow would be the last generation that used a Qualcomm modem chipset. Well, based on the agreement that's out this morning, that is not the case.
Now, for more on the Apple products being unveiled, we turn to Bloomberg's Courtney Donahoe.
Apple is set to unveil the iPhone 15 tomorrow alongside updated watches and AirPods. Once again, the company will be prodding users toward pricier models. iPhone unit sales have remained stagnant for the past 7 or so years, but revenue has grown about $70 billion over that time frame.
What exactly will you get for paying more? Well, top-end iPhones are expected to offer more expensive components like titanium frames, new camera sensors, and also additional storage. Shares of Apple right now, they're down just a fraction. And Meta Platforms is ready to challenge OpenAI. Sources tell the Wall Street Journal that the company is working on a new AI system intended to be as powerful as the most advanced model offered by the company behind ChatGPT. Now, it's expected to be released next year. Checking in with shares of Meta Platforms right now, they're up nearly 2%. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks are higher, but pairing some of the earlier gains in the S&P 500, you have 7 of the 11 major industry groups higher right now. Biggest drag that's coming from consumer discretionary. That's where you're going to find, among other things, right now, NVIDIA down about 2.7%. You get the data on Wednesday, CPI, that's expected to see a pickup in year-over-year headline inflation. The last big data point before the next Fed meeting. This could push Treasury yields higher after more than $55 billion is sold last week. Syndicate desks are expected to be active again with another $30 billion in corporate debt anticipated to price over the next 5 days. S&P 500, 20 points higher. That's up 0.4%. The Dow Jones Industrial Average is up 125 points right now. That's up 0.4%. And the NASDAQ 100 up 67 points, a rise of 0.4%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Matthew.
John Tucker, thank you very much for that. We want to talk real estate right now. We have Rick Caruso with us. He's the founder and executive chairman of Caruso, starting out life as a lawyer and then transitioned to Caruso Affiliated Holdings, and they own, among other things, The Grove, which was ranked number 2 on Fortune's list of the 10 highest sales-generating shopping centers across the country. I've always been a fan of the mall.
You haven't?
Yeah. I love the Westchester up in White Plains,
You're
for
not
example.
a Jersey person, though. Jersey, we do malls in New Jersey.
Yeah, I'm from the great state of Ohio.
Of course.
We have traditionally had big malls. At least they started, I think, when I was a kid, so I kind of grew up with them. Fast Times at Ridgemont High was like the story of my middle school. Rick, talk to us about the current state of commercial real estate, because it had been, kind of one of the big fears, I would say, of 2023, but it seems to be fading a bit as a fear.
Well, thank you. I think on the retail side, listen, we do outdoor malls, so all of our properties are not covered. I think that's a very different sector. But what we're seeing on our properties, consumer is still strong. Consumer spending is still up. Our growth on our properties is double digit in terms of attendance, and our sales per square foot is up. So we're having a very good year. My fear is that with inflation, with rising interest costs, I don't know how long that lasts, but right now we're running at a really good pace.
What's the occupancy of your malls in general today, maybe relative to pre-pandemic?
We're very unique. So I'm going to tell you this and you won't believe it, but we run at 100% with a waiting list. But our properties are incredibly productive. We have 3 in the top 10 in the United States. We're a different business.
Yeah.
It's a very different business.
It's not strip malls. What's the term that you use
No,
for
it's
it?
like Ridge Hill we have up in Westchester.